Market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Jerome Powell reiterates the need for hikes, but holds off criticising looser financial conditions. Stocks and futures climb. President Biden vows the US will pay its bills on time as he calls on Congress to raise the debt ceiling in his State of the Union address. Plus, sources say Credit Suisse will pay some of its junior and mid-level bankers' bonuses in installments as part of its broad overhaul of operations.
Tom, we'll have a full roundup, of course, of the story and the main news from Credit Suisse and from Zurich. But if you look at the futures, as you were saying, it's all about Jay Powell, the rate path going forward. Earnings not too bad, so we're seeing a bit of a lift. The FTSE 100 futures, for example, gaining 0.5%.
Yeah, and the comments from Jay Powell that, yes, this labour market is very, very tight. You may need to get to a higher terminal rate than the top lots are currently suggesting. Currently, that is 5.1%. So the terminal rate could be higher. Further rate hikes could be in the pipeline. But yes, we are also seeing disinflation. The market really, of course, no aggressive pushback on the loosening of financial conditions from the Fed chair. So you saw the upside in that late day rally, particularly pronounced in the Nasdaq gains of a little over 2% for that tech-heavy index. Here in Europe, then, Spanish IBEX opening up 0.5%. That's a gain of 49 points. The FTSE 100 gaining 0.5%, building on this rally that we've just seen for the FTSE 100 through the year. Currently at 7,900. You'll see if we cross through 8,000 for the FTSE 100, another line to cross potentially later this year. The CAC current gaining 0.7%. The earnings picture, of course, coming through. SocGen will be part of the play there in the CAC current. It was a beat for that French lender. A miss, though, for Maersk. We'll be talking about the supply chain constraints and shipping and trade around that interview. In terms of how things are playing out across these markets and cross asset, then, as I mentioned, a very strong session for Nasdaq. It looks like you're going to be adding moderately to that on the back of these futures. Euro-dollar 107, that's a gain of 0.2%. Yes, there's dollar softness that's come through. Yields a bit lower, down 4 basis points on the 2-year. The front end of the US curve, 442 now on the 2-year. And Brent, $84 a barrel, that's a gain of 0.7%. WTI saw gains of more than 4% yesterday. Goldman Sachs, Morgan Stanley now saying plus $100 oil is going to be happening in the second half. They are flagging more than $100 oil for the second half of the year, partly and largely down to the demand picture out of China. That's a quick look at the cross-asset picture, Fran.
Yeah, and that, of course, means extraordinary inflationary pressures. I wonder what that does to central banks. And, of course, that's pushing today on the back of that Goldman call. Basic resources gaining 1.2% amongst the biggest gainers. We also have technology gaining 1.3%. I'm actually looking at 20 groups that make up the Stock 600. Not one, I repeat, Tom, not one is on the downside. So we're seeing gains across the board. The one that's not gaining as much as Autopods, they're still up 0.2%. Now let's get over to the Bloomberg MLive managing editor. He's the one and only Mark Cudmore. And Mark, you're looking at the Japanese yield curve. Good morning.
Yes, good morning, Fran. Of course, there's lots of speculation when the official announcement will come from the new BOJ governor. We are expecting it in the next few days. That's not definite, but that is the general expectation out there. As a result of that, I'm looking at the Japanese yield curve. Now, this has been one of the big plays of the macro hedge fund community over the past year. So this is 4 different snapshots of what's happened under Kuroda's tenure at the BOJ. So this is the yield curve in Japan back in 2012, an upward sloping normal yield curve. It's positive all the way out. All wonderful. That is just before Corona took over. Now this is 2016. We've had the curve completely flatten, and you may not be able to see those numbers there, but the front end of the curve went negative, and the back end is yielding well below 1%. It's a pretty depressed curve. Then we got the pandemic. This is September 2020. It's an even more broken curve. It's flat all the way out. We're seeing 30-year yield only about 0.5%, nothing being offered. We're deeply negative all the way to 10 years. This is a broken market. Now, suddenly, 2023, this is the curve as of yesterday. Look at this. We're back to the pre-Corona world with one big exception, which I'll mention in a minute. We're upward sloping. Sure, the front end's still negative, but look, the back end is offering up towards 1.7% yield. This looks like Corona has done the full round trip. He's restoring his successor, a functioning curve. What's the big exception? Look at this kink. This is a more normal curve, but over here, because of the yield curve control policy, 10-year yields are completely depressed in Japan, and they offer much less than earlier parts of the curve, 7, 8, 9 years, which obviously doesn't make any rational sense. And this shows the real problem with BOJ yield curve control policy. Never mind the BOJ owns more than 50% of the market. It is distorted and not as normal as it looks at first glance.
All right, Mark Cudmore, brilliant stuff. No one does curves better than Mark Cudmore. M9's managing editor, Mark Cudmore, on the kinks in the current curve market. And what we'll see in terms of the next BOJ policymaker, of course, the head of the BOJ expected to change in April, how that policy could potentially change. Now, talking of policy, Fed Chair Jerome Powell says the central bank may have to hike more than what's priced in if the US labour market remains strong. Don't forget the dot plot pointing to 5.1%. Powell was speaking to Bloomberg in his first speech since the latest FOMC decision.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Okay, joining us now is Madison Fuller, Global Investment Strategist at JP Morgan Private Bank. Also with us is Eddie van der Walt, our Markets Live Deputy Managing Editor. Good morning to you both. Madison, let's start with you. Good morning. Thanks for coming into the studio. Again, the markets look through a pretty nuanced commentary from Jay Powell. He said, yes, there is disinflation, but he also suggested the terminal rate could go above that dot plot forecast of 5.1%. There could be further hikes in the pipeline, and that the market remains, the labour market remains red hot. We're still not seeing services inflation come down significantly. Is the market misreading this Fed?
I think that's a fair question to ask, and I think we need to be careful with how we're interpreting the market rally that we've been seeing. To me, it's not a rally based upon incrementally dovish messaging. I think it's actually more so that Powell's message wasn't incrementally hawkish. And to that point, I think that's also why we saw that market pricing for Fed rate hikes this year remained pretty much unchanged despite yesterday's speech. And so I think, you know, we're grappling with this question, can the economy absorb higher interest rates? And I think the data over the course of the last few weeks suggests that there's a higher probability that that can be the case. But nonetheless, when I think about the broad paths forward and the full scope of probabilities, I do think that we're still skewed towards tipping into a recession than that soft landing scenario.
So, Madison, are you expecting actually the terminal rate, or are markets pricing in the right kind of terminal rate, or is it, you know, could it be a bit lower but for much longer so that we don't have cuts for a while?
Yeah, I think what's interesting is the market is, you know, pricing in a fair terminal rate, but they're also pricing in cuts because they are expecting this kind of immaculate disinflation scenario where you get inflation to fall quite naturally, but with minimal economic pain. I think to go back to Powell's remarks on the labor market and the fact that demand and supply for the labor market remain largely out of balance, it's difficult to see how you get inflation to come back down with that type of imbalance, with that minimal economic pain.
Eddie, let's bring you in at this point. That immaculate scenario that Madison just outlined for us, that markets, at least some investors, are gearing up for. How much of a potential setback could they be facing if that immaculate scenario doesn't come to the fore?
Yeah, absolutely. I definitely do agree with Madison on the point that the market, that this was an incrementally hawkish message from Powell, not an incrementally dovish message from Powell. So we have to unpack, you know, the market reaction, and we have to look at this market reaction where equities are rallying and ask, you know, what it is that the markets are seeing. And I think the markets are slightly more, it's taking a dovish tilt from the message. And yes, there is this idea that the economy can perhaps sustain higher rates, but that just means that their rates are going to go ever higher and higher, right? Because at some point they want to bring inflation under control. Remember, Powell said that the job market remains strong, and that the economy, doesn't seem to be faltering just yet. So he is indicating that they might hike rates, to a higher terminal rate. And I think, therefore, we could see significant downside in stocks when we get the inevitable upside reading in inflation prints.
Let me jump in, Eddie, because we also, of course, need to keep an eye on everything that's going on in the disaster zone in Turkey. So we know that President Erdogan has announced a 3-month state of emergency. We know that he plans to visit 2 quake-hit provinces today. And then the latest headline is also on Turkish stocks. Turkish stocks had dropped more than 7%. That means it triggered a fresh market circuit breaker. And you can see now, for the moment, Turkish stock market has suspended trading, Tom.
Yeah, we're also hearing around the election date as well. Of course, it's a big year for elections in Turkey. Erdogan still plans a May the 14th election despite the quake. Okay, we'll be getting more details on that story throughout the hour. Madison, let's bring you in at this point and get back to the question around how the markets are interpreting this Fed. You're still pretty, I was reading through your notes, you're still pretty constructive on these equity markets. How are you positioning, despite the fact that you think that possibly markets are getting a bit ahead of their skis in terms of this glorious scenario that could unfold?
Yeah, and I think it's about, how do you manage the next 6 months of a transition versus how do you set yourself up for the longer term. And so I think in the short term, markets are perhaps running a little bit ahead of themselves in the sense that valuations are starting to look a little bit stretched, especially when you consider the fact that, and as Chair Powell mentioned, disinflation is probably going to be quite a bumpy path back towards, that 2% inflation mandate. And in addition to that, I think that earnings expectations also have to continue to fall. So over the next 6 months, I'm more focused on how do we stay invested, how do we protect those gains, and we're looking at structured notes as a way to do that. But I think that as we get past the middle of the year, as we've likely seen that Fed pause, as we get clarity on the growth picture, what that means for inflation, what that means for corporate profits, I think that allows more of a clearer runway and for markets to end the year higher than where they are today.
Where are you expecting, Eddie, a lot of these markets to go? So we have earnings season. We, of course, also have that call from Goldman Sachs on oil at 100. Do we need to rechange some of your thoughts longer term on stocks?
Yeah, and I think that's fair. So longer term, I think when it comes to where we're most constructive, I think we need to think about what are the drivers of CapEx. And to us, that probably means more geared towards the real economy, not so much geared towards the mega cap tech leaders that we saw lead in the last cycle. And so I think we have to think very carefully about how we're positioning further in this environment.
Eddie van der Walt, let's bring you in at this point on the NASDAQ rally. Gains of 16% year to date. There are many strategists out there who say, look, the tech rally is looking too hot, but they would have missed out on these almost double-digit gains in tech.
It's been a fantastic start to the year, right, in a lot of asset classes. And I think there is a lot of caution to be had right now because I think the signaling from the market and the signaling from the Fed remains, at odds with one another. And I think there is going to be a reconciliation at some point. And we've got to figure out where that reconciliation happens. And I do agree with Madison that there is potential for that short-term volatility before we get back to the upside. So I think I'm broadly in agreement with that, with that assessment. I think the big areas for gains, possibly the areas that are still most underpriced is in commodities, where oil prices have had a lackluster year. And if you really look at China's reopening, I think we could see very strong commodity prices in the year going forward.
All right, thank you both for joining us. Madison Fowler, their global investment strategist at JP Morgan Private Bank, and Eddie van der Walt, our MLive deputy managing editor. Now, we're also getting, of course, some breaking news out of Credit Suisse. It is to pay some of its junior and mid-level banker bonuses in installments. That was a big story of yesterday. Today, we also talk about risk in Asia. Tomorrow, we have Credit Suisse earnings, and so we'll also have an interview with the chief executive. We'll bring you all of the latest on the Swiss bank next. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
We've had 2 years that have been absolutely exceptional. And during those 2 years, we saw a lot of customers actually order probably ahead of demand because they really wanted to meet the sales that they could have. As the world became a bit more normal after the pandemic, we've seen some of these demands slow down. We've seen this correction start to unfold already since September, and we expect it to continue here in the first half of the year. And that certainly will trigger a correction in earnings across the markets that we operate in. It creates also a lot of opportunities for us to continue to serve our customers, but it is a much more normal world we're heading back into. This inventory correction has meant a sharp decrease of imported volumes into mainly Europe and North America, and that has triggered this adjustment. This will continue, we expect, for another quarter or two before demand firms up again. What has triggered our guidance is the fact that on the back of this inventory correction, we're also seeing supply side risks as a lot of new tonnage is going to be phased in the second part of the year, which certainly creates some caution and some volatility towards the second part of the year.
That was Vincent Clark, the Maersk chief executive, speaking to Bloomberg after earnings. Now, if you look at the share price for Maersk, they're down 2%, something that we always keep an eye on, Tom, because, of course, it gives us a barometer of trade and where the world economy could be headed.
Yeah, and it's interesting to hear from executives at Maersk saying, look, container trade is likely to be lower than some of the estimates, and that these are going to be very volatile conditions. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Jerome Powell is sticking to his message that interest rates need to keep rising to quash inflation. Speaking to David Rubenstein at the Economic Club of Washington, the Fed chair said borrowing costs may reach a higher peak than the market anticipates. Powell said the U.S. labor market remains extraordinarily tight, warning the battle against inflation won't be quick or easy. Bloomberg has learned Credit Suisse is to pay some of its junior and mid-level bankers their bonuses in 3 installments. Separately, in Asia, we understand the Swiss bank is dialing back some of its stringent anti-money laundering controls. That's after they drew protests from clients and bankers and contributed to staff departures. Zoom shares jumped on news it's cutting 1,300 jobs as it looks to restructure. Faced with slower post-pandemic growth, the CEO, Eric Yuan, says headcount tripled in 2 years during COVID. The cuts amount to 15% of Zoom's workforce. In a blog post, Yuan calls himself accountable and says he'll reduce his own pay and forgo his bonus. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thank you very much indeed. Right, Joe Biden has vowed not to allow the US to default on its debt. Speaking during his State of the Union address, the US president urged Republicans to find common ground. Bloomberg's Jennifer Zabasajja joins us now for the details of that speech. Jennifer, what were the highlights then from what we heard from the president in his State of the Union?
Yeah, Tom, I mean, I think he was really trying to show this unified front between Democrats and Republicans, but he didn't mince words when talking about what his predecessors had done, specifically raising the debt ceiling 3 times, and how he does not want to see that happen again at this point in time, and it's essential for Congress to act now. I think, you know, a number of things that really stood out specifically about his proposals. One thing, raising tax on stock buybacks, specifically targeting big oil and what he called their reported record profits. He also brought up minimum tax on billionaires, saying billionaires should not be making more than teachers and firefighters, and talking about sort of his economic agenda over the past 2 years, noting the jobs numbers that we got, of course, the other day, and how there's no room for any sort of default in this economy moving forward.
It was quite a spectacle. I feel like we were watching like a House of Commons debate. I mean, there was one what Marjorie Taylor Greene kept on calling him like liar. I mean, he's calling for, you know, for them to come together like a unity plea. Will it work?
Yeah, I mean, Fran, I think that was a really interesting point, specifically with House Speaker Kevin McCarthy having to shush the House chamber a little bit, Marjorie Taylor Greene a little bit, but Biden really sort of reveling in the opportunity to go head-to-head, showing that, you know, he wants to find common ground. He said even with Kevin McCarthy, it might ruin his reputation, that he wants to find common ground, but that it's essential to move the economy forward. So I think this was just a preview of what we're going to see from Biden moving forward, especially when he hits the road today to go to Wisconsin to continue talking about his economic agenda.
Okay, Jen, thank you very much indeed. Breaking down the State of the Union from the president, some interpreting it maybe as a launch pad for the next election campaign from the president. Jennifer Zabasajja, of course, here in the studio. Okay, coming up, we are going to get the latest on the rescue efforts following, of course, the massive earthquakes in Turkey. We'll bring you the update. That is next. This is Bloomberg.
Amazon acquired Zoox back in January 2020 for what reports suggested was $1.2 billion. Since then, the company has revealed its Zoox vehicle. This is, I think, a rectangular passenger-focused vehicle with no driver's seat or steering wheel. How would you describe it?
We describe it as a purpose-built vehicle, but it's really a robo-taxi. That's its purpose. And essentially, it's about transporting people from point A to point B on demand in the most effective, cleanest, and most enjoyable way.
So why won't you call it a car?
Because a car is, there's an inference that there is a driver. Whereas in our robotaxi, there is no manual driving. A human cannot really drive it to transport passengers. So we want to make sure that that mindset, that shift, that distinction is clear.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, 23 minutes into the European trading day. Again, the market's reading into what they want to read into when it comes to the Jay Powell comments. Yes, signs of disinflation, but he did suggest that the terminal rate could go higher if the labour market stays this tight. The European stock benchmark currently gaining 0.5%. Futures, though, dipping lower in the US. A little bit of profit-taking after a barnstorming end of the session yesterday, particularly on the Nasdaq. Nasdaq futures now down 0.3%. Across your sectors here in Europe, energy, top of the list, 1.5%. Goldman Sachs suggesting plus $100 oil could be in the cards for the second half, Fran.
Now let's also look at the other stocks to watch with our Joe Easton from our equities team. Joe, you always have interesting nuggets that we haven't necessarily thought about. What do you have today?
That's right, Fran. So we're starting over in the technology space, and we've got Adyen down as much as 12% this morning after their profit did miss expectations. This is actually interestingly driven by an increase in headcount, something we've not really seen much of in the tech space of late. That is pushing their costs up higher, and as you can see, they're down as much as 14% in Amsterdam. I've also got my eye on Maersk, the world's largest shipbroking and shipping company. That stock down as well today. Guidance missing expectations by as much as 20%, according to analysts. Not only are freight rates now coming down from those massive highs that we previously saw, volumes are also weakening, according to the company. Volumes down around 14% in the latest period, according to Maersk, based over in Copenhagen. Staying over in Denmark, I'm also looking at Pandora. That stock going the other way, jumping today. They're reporting some pretty strong numbers in terms of their guidance, having had a really strong Christmas period. They're announcing a 5 billion Danish kroner buyback as well, according to the company this morning. That stock up around 5% ahead of Valentine's Day next week. Will they no doubt do some strong trading.
Joe Easton there, of course, on the movers in this market. Thank you very much indeed. Now, Turkey has declared a 3-month state of emergency in areas hit by the twin earthquakes on Monday. The total death toll across the country and neighbouring Syria is approaching 8,000, with more than 11,000 buildings damaged in the disaster. We're joined now by Bloomberg's Simin Demirkan live from Istanbul. Simin, give us the latest on the ground.
Yes, hi. So today is the 3rd day of rescue efforts, still desperately trying to find thousands that could possibly still be trapped. Here in Turkey, the death toll has passed 6,200 people, with more than 31,000 people injured. Of course, the double earthquakes, the twin earthquakes that hit on Monday, struck 10 cities where 13 million people live. International rescue teams are on the scene. Turkey has also announced that it is deploying thousands of soldiers. Now, Bloomberg has just learnt that President Erdogan still plans to go ahead with the May 14th election despite this earthquake disaster. Also, Iraq has announced that it is resuming oil flows to Ceyhan on the Turkish Mediterranean coast, which was halted on Monday to seek any damages, and no leaks were found.
Simin, thank you so much. Of course, Simin Demirkan with the very latest from Turkey. Coming up, we continue looking at Turkish, of course, the economy. We look also at some of the earnings out there. Vontobel warns of a challenging year as a Swiss private bank posts full-year net income that misses estimates. We'll discuss that with the chief executive, Zeno Stab, next. And this is Bloomberg.
about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies, and I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Jay Powell reiterates the need for hikes, but holds off criticizing looser financial conditions while stocks and futures climb. President Biden vows the U.S. will pay its bills on time as he calls on Congress to raise the debt ceiling in his State of the Union address. Plus, sources say Credit Suisse will pay some of its junior and mid-level bankers' bonuses in installments as part of its broad overhaul of operations. Tom, what are the markets looking like?
Well, it's a positive handover from Wall Street, certainly. The gains, of course, about 1.3% on the S&P, 2% for the NASDAQ. That optimism, certainly. The fact that Jay Powell didn't push back aggressively on these looser financial conditions, giving extra juice to these markets. So across the benchmark, you're now up above 460 for the European benchmark, adding 3 basis points, up 0.6%. The DAX is up about 0.5%, and the FTSE 100 just continues to build record after record for the UK benchmark. 7,908 now on the FTSE 100. That's a gain of 43 points in the session today. A lot of that is coming down to what's happening in the energy space. Let's switch it over and see how things are breaking down and across these sectors then. The context around oil, and this is really important because WTI gained about 4% yesterday. And then you had the likes of Goldman Sachs coming out and saying you're going to see above $100 per barrel by the second half of this year. So that continues to fuel what is happening in the energy sector. Gains 1.4%, 1.5% across chemicals. Technology also seeing some upside. The NASDAQ ending very strongly in the session yesterday, 0.9%. Just 2 sectors in the red, industrials and auto parts down 0.6%. Fran.
Now, Vontobel's net income declined almost 40% in 2022, driven by outflows in the asset management business. That's as a Swiss money manager warns of a challenging year ahead. Well, joining us now is the chief executive of Vontobel, Zeno Staub from Zurich. Thank you so much, Mr. Staub, for joining us. What are you most worried about in the next 12 months? Is it liquidity or volatility?
I'm neither worried about one of them, not for our clients, not for our strategy, not for what we do. We're very focused. We're very committed to our investment approaches, and we think we are very well positioned to navigate both challenges and deliver to our clients.
You did say, sir, good morning. Thank you for joining us. You did see some outflows, about 5.2 billion in terms of Swiss francs. Do you expect those outflows to continue? And can you explain what exactly was the catalyst for those outflows?
The answer is a very clear no. We have already seen a very high level of stabilization in December, and the first weeks of the new year are very constructive. The underlying pattern to the flows we have posted for the full year is industry-leading 5.6 annualized yearly growth in wealth management, the third year in a row of very robust, repeatable, strong organic growth in wealth management. I think that's a very, very strong proof point.
Yeah.
The asset management outflows were fully in line with the industry, focused on the risk re-rating in fixed income and in some equity segments that we saw in 2022. However, what we saw by the end of the year was stabilization. What we see in the beginning of the year is a very constructive outlook, fast building pipeline from client interests, and we are very constructive to look into the new year.
Yeah. Mr. Staub, your share price on Monday was down 2%. Yesterday it was down 2.3%. Today it's down 4.2%. What are investors worried about then?
That's a question that the sellers and buyers of our stock have to answer. What we are committed to, we try to run a great company for the long term, and we are convinced that over the cycle, the stock price will follow. We're not managing the stock price, we're managing the firm.
Some of the executives, you talked about clients staying on the sidelines towards the end of last year. Do you see that improving? Is there more risk appetite amongst your clients, or are they remaining cautious?
No, we see a more constructive behavior and a more constructive outlook. We see a highly intensified dialogue also on the institutional side, and we have had a constructive start into the new year.
For some of the outflows, where's the money going? Do you think private equity or private markets is taking a bigger chunk, or was it just an odd 12 months?
It was just an odd 12 months. It was just de-risking. We were also hit by the LDI situation in the UK, as we are a key provider to pension funds in the UK through our Boutique 24. We're very confident that clients will appreciate how highly liquid, how professional we have mastered this situation, and the money will come back to us and our products.
Have you been able to benefit from the travails of some of your competitors? I'm thinking, of course, of Credit Suisse. Is there market share to be taken there?
We base ourselves on strength and not on the behavior or on the aspects of the competition. What we have shown in wealth management now for the third consecutive year, robust, very highly diversified inflows. What I can add as color, the inflows are diversified across quarters. They are diversified across all our business areas, and there was not a significant pattern from any single institution in 2022. This 5.6 annualized growth is repeatable and robust in our underlying franchise.
Mr. Staub, of course, you played, as you said.
We keep winning market share year over year.
Yeah. Yeah. You also, of course, played a key role, as you said, in the gilts meltdown, in trying to support some of your clients going through it. When are you expecting, because of measures here in the UK, that market to stabilize somewhat? At the moment, there's still operations from the Bank of England, and as you said, UK pensions are still dumping some assets.
No, we have seen a stabilization in the last month of last year. We see now a highly intensified interest, and we are pretty confident that we rebuild from here, and the outlook is positive. I see this in the early flows, I see it in the pipeline, I see it in the dialogue with clients. Remember, we have highly liquid, high quality, diversified strategies.
So moving from the UK to the US, what is the next meaningful step you plan to take to grow your presence and your market share in the US?
We have completed two key steps in 2022. We have digested and consumed the acquisition of SFA, the SEC registered investment advisor, Swiss-based from UBS. So that acquisition has been completed. We're up and running now. We're the largest leading Swiss-based SEC investment advisors, cooperating with UBS Americas and serving US clients. So we are in full swing there. On the asset management side, we have built the ability to have all our products globally, be they produced in the UK or in Switzerland or in the US, obviously, to put them at the disposition of US clients. And we have already won a first mandate out of a Zurich-based boutique. So we are up and running, and we build organically from here, and we have all the tools we need to make a significant impact in the US.
Mr. Staub, when you look at the Adani fallout, we're trying to figure out exactly what the pitfalls are for financial firms. Do you have any exposure to Adani?
No.
Great. There's nothing. Do you think that it could be a systemic risk at some point, or is it too soon to say, or are you confident that we'll get through it smoothly?
This is not a systemic question. It may pose questions for individual players, but I assume that regulators are on top of things.
Okay, Zeno Staub, we really appreciate your time this morning. CEO of Vontobel on the back of those results. Thank you very much indeed. Coming up, M&A is showing a resurgence after one of the worst Januaries for deals in decades. More on that next. This is Bloomberg.
Transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them, and so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value, and the kind of transparency that they want.
Are you seeing a labor shortage right now, and what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
The top names in business are on Bloomberg.
More and more people are frightened of the realities of today, and that's manifesting in so many areas. Why would anybody put something into a 30-year obligation unless you believe something is better in 30 years? I'm not here to suggest it's going to be rosy in 2023, but what I'm saying for long-term investing, it's a better environment for long-term investing today than it was 2 years ago.
Nobody covers business like Bloomberg, your global business authority. Season is here.
Consumers cautious in the UK.
Are we being overly optimistic?
The pain in earnings has not come yet.
Bloomberg breaks the numbers first.
Forecasting a double-digit decline in revenue.
On the back of record sales.
With exclusive expert analysis.
This year feels so different.
As economies move into slowdowns, earnings are likely to come off.
They're going to be really closely watched.
The important point is the strength of the core franchises.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open, everyone. 42 minutes into the European trading day. For the moment, we're holding strong. Certainly, we had that Powell hike warning yesterday to try and figure out what it means going forward. But European stocks holding strong. We also have a lot of earnings. You can see European stocks gaining some 0.6%. Tom.
Yeah, let's get a closer read across in terms of the earnings picture then and some of the individual corporates that we're watching. At the end, this is a financial company in terms of financial transactions, taking a big hit today on the back of a miss in terms of its results, but also adding headcount, and that seems to be causing concern for investors in that company, currently down 13%. Equinor is a beat, and you can see rallying a little over 6%. Of course, the Norwegian energy company beating in terms of earnings and coming out with a raised dividend. So good news for investors in Equinor. ABN AMRO also a beat, gains of 4%, a little over 4%, announcing a $536 million, $500 million buyback from ABN AMRO, and the stock gaining on the back of that announcement. Fran.
Now, a flurry of big deals in sectors ranging from mining to storage has provided respite for the world's deal makers after their slowest start to the year in 2 decades. Data compiled by Bloomberg actually shows $40 billion of potential transactions coming to light in recent days as companies start spending after a prolonged period on the sidelines. Well, joining us now is Fabio Canet, senior partner of NB Renaissance, the Italian private equity business of U.S. manager Neuberger Berman. So thank you for joining us, Fabio. Give us a sense, first of all, what's attractive right now? What's at the right price that you can grow?
Yeah, no, first of all, thank you for inviting us on this interview. So right now, first of all, let me say what we do. We invest in Italian companies that are international in nature. So 65% of our revenue is based and is made outside Italy, and that are leaders in market niches, in particular in the mechanical, in the intermediate products for luxury firms. We have invested in the leather, for instance, in the leather business, and we tend to help families because we co-invest with families in grow their business outside Italy. And in doing that, we have about 450 million euros of capital in the last fund that has been fueled by international investors coming to Italy and trying to invest in these families through our vehicles. As of today, we have 2.5 billion euros under management. We have invested so far about 2.3 billion euros. We have about 300 million euros that should be invested in the next year.
Fabio, I just want to get in because I just want to get a sense. I just want to get a sense of where you're targeting some of that AUM, kind of in the next 6 to 12 months. What is looking like an opportunity?
Yes, we are targeting. First of all, we have to continue to invest 350 million euros of the existing funds. So the next fund hopefully will be in 2024, and we target 1.5 billion euros, so with a growth from 1 billion to 1.5 billion. The sectors that we are targeting are the ones related to the technology, that we have already 3 companies in the technology, in the environmental sustainability. We have done 3 investments in this sector, healthcare, and specialized industrial.
Fabio, how is private equity changing? So are you going to keep on to some of the companies for longer, like we've seen in the last 4 to 5 years, or is it quick turnarounds? Will private markets take a bigger place in investments?
No, it's not going to be a quick turnaround. At least it's not in our culture to do this type of transaction. We tend to invest in the company to let them grow over the years, and when they will be mature enough, we'll decide to take a next step. That typically is either a sale to an industrial player or also the listing, but definitely is not going to be a short trip.
What is the adaptability of your portfolio companies in the face of higher inflation, in the face of slowing growth, in the face of higher rates?
Well, on the higher rate, we do not tend to overload the company with a lot of debt, so it's not going to impact us that much. On the inflation side, if we invest in sectors where you have typically, when you are critical for the value chain, you will be able to move the impact of the inflation on your clients. So we have tons of examples where we are critical in the value chain and we have not suffered on the inflation. The thing that is impacting the most is the lack of materials, in particular case of chips, that is going to be fixed during this year.
Yep.
That avoid you to ship your products, and we have a couple examples of that. But on the price, we are pretty much comfortable.
All right, Fabio, thanks so much. Fabio Cane, senior partner at NB Renaissance. Of course, one of the big questions over Italy is also the government, for the moment, staying in line with what Mario Draghi had put in place, trying to get those funds from the EU. But of course, if they don't get it, then it could be a game changer for Italian
And as a result of that, BTPs have been pretty well behaved. The 10-year currently 4.28, not a lot of movement. It moved up 5 basis points, but that's essentially in line with what we're seeing across sovereign debt. But that really does paint the picture of the fact that, yes, the bond markets in Italy have not blown out over that political risk that many, or at least some, were cautious about leading in to the end of this year. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. France has adopted a law to accelerate the development of renewable energy, though some critics say it will actually slow onshore wind and solar projects. Parliament passed the measure to reduce France's dependence on fossil fuels. Unions, meanwhile, held a third national day of strikes against raising the retirement age. The government says around 750,000 took part, down from more than 1.25 million last time. A number of hedge funds and distressed debt specialists have scooped up bonds related to Adani's business empire. In a potential positive sign for the group, Oaktree Capital Management, one of the world's largest opportunistic debt firms, is said to be among those buying paper in recent weeks. The Pentagon says China refused a call from the US to discuss a suspected spy balloon which was shot down over the weekend. A Defense Department spokesman says talks with China's defense minister were being sought. The US says the balloon was carrying out surveillance, while China maintains it was a weather monitoring device that blew off course. Basketball star LeBron James has overtaken Kareem Abdul-Jabbar as the NBA's all-time leading scorer. The Los Angeles Lakers broke the record, which has stood for nearly 40 years, with a shot against the Oklahoma City Thunder. Tickets for the game were being offered for almost $80,000 each on the resale site StubHub. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg. Tom Francine.
Laura Wright here in London. Thank you. Right, coming up, the latest on the Credit Suisse bonus saga. Yeah, the bank due to pay some of its junior and mid-level bankers in installments. We bring you the details. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Bloomberg.
Welcome back to the Open, everyone. 52 minutes into the European trading day. For the moment, we're holding strong. European stocks have definitely gained all morning, buoyed by positive earnings. And then we also had a late rally in the U.S. yesterday following Federal Reserve Jay Powell passed up on an opportunity to tamp down investor optimism. So we feel like he's incrementally hawkish, or certainly the markets are interpreting it that way. Still, markets in Europe up, Tom.
Okay, here's a footnote for some of your calendars then. Some of the events we are following today. 2 p.m. UK time, New York Fed President John Williams will be interviewed at a Wall Street Journal event live in New York. Anything he says, of course, about the trajectory of rate hikes, the inflation dilemma, will be in focus.
Now, there's a slew of other Fed members speaking throughout the afternoon, including Michael Barr at 3 p.m. At the same time, we'll hear from ECB Governing Council member Klaas Knot on the euro area economic outlook.
Okay, let's get to the story around Credit Suisse then and its handling of compensation. Bloomberg has learned that the Swiss bank is to pay some of its junior and mid-level bankers and their bonuses in installments, 3 potential installments. For the details, let's bring in Bloomberg's Tom Metcalf, who's been looking at all of this for us. Tom, bit of a surprise. What is the rationale? What are we hearing about the way that Credit Suisse is changing up its comp plans for the next few months?
Yeah, look, another twist in this saga. So hearing that basically, for young and mid-level bankers, they're effectively going to be paying it sort of in 3 installments, so around April, July, and also October, and kind of several days after that, or maybe even up to like tens of days after that. And you know, look, when I saw this, I was really scratching my head because I'm like, morale's already pretty low there. If you're a young banker looking forward to getting paid out, this is really going to hit that. So as to why they're doing this, I think Francine had an interesting...
My game theory, my chase. So you take basically the assumption that they're not trying to kill morale, and that would be an assumption which we could be wrong on. So I guess some of the reasons could be either there's a big investor that said, look, let's hold off, try and keep these guys and girls and see what happens in 2-3 months, or they have a turnaround plan, right? Or they have some kind of good news, because otherwise it just saps morale. And I mean, they don't want people to leave. They need to keep them at all costs.
No, exactly. They're trying to keep their top talent, so it is slightly odd that they are, you know, making this move. And I think, that is an interesting theory. Maybe it's also, you know, they're just, as I say, trying to spread it out over the year and being very, very cautious.
Is it the cycle of loyalty of traders?
Yeah, do you hold on through that period of 3 different tranches to get the full bonus, or does it just prove such a hit to morale
or banker
that you're going to see people walking away?
Well, I think that's the real tough problem, right? Because what they're really trying to keep are the top performers, right?
Yeah.
And those top performers are probably more inclined to walk from something like this because they'll back themselves, hey, you know what, I can get a big sign on somewhere else, I can get a bonus.
And they've been given cash incentives, some of the top performers, and yet there's some legal challenges in Europe and Asia over some of these.
Yeah, well, I think they're, you know, as part of that, you know, Credit Suisse trying to lock those folk in for several years. And I know, sort of across the world, some bankers, as they tend to do, sort of shirking against any restrictions. So Credit Suisse in a really interesting spot, and I think trying to navigate it. Okay. But from the outside, it's sometimes like, is this going to work?
Okay, watch this space. Tom Metcalf, always excellent, of course, on the details around Credit Suisse and its changing comp picture for many of their bankers there. Let's just bring you up to date with what's happening in Turkey. Of course, we continue to monitor events on the ground regarding the double earthquakes that hit that country. In terms of the markets, we do bring you the news that Turkey has suspended its trading in the stock market. We brought that to you earlier. This is the first time, by the way, that they have suspended trading in Istanbul since 1999. That is following a very steep sell-off there that triggered some of these suspensions, and it was headed, the Istanbul index, to its worst weekly performance since the 2008 global financial crisis. So that's the top red story right now on the market implications of the tragedy in Turkey. Stay with us. There is more coming up. This is Bloomberg.
No one can claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
The moment news breaks, no one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Jay Powell reiterates the need for hikes, but holds off criticizing the looser financial conditions. Stocks and futures climb. While President Biden vows the U.S. will pay its bills on time as he calls on Congress to raise the debt ceiling in his State of the Union address. Plus, sources say Credit Suisse will pay some of its junior and mid-level banker bonuses in installments as part of its broad overhaul of operations. Now, first of all, let's look at the markets. For the moment, we're seeing gains across the board. Now, European stocks are actually gaining, buoyed by some pretty positive earnings. And this follows a late rally in U.S. shares in a pretty volatile session after Jay Powell passed up on opportunities to tamp down investor optimism. Now, Powell's sober comments really echoing those made from some of the FOMC officials last week, and that's really soothing traders who are expecting the Fed chief to push back on the loosening of financial conditions. So we'll have plenty more on that. In terms of earnings, we have a couple of earnings that we need to keep an eye on. We had Fontobel, bit of concern about outflows there, but then we have some of the better news stories out there. If you look at the 20 the 20 industries that make up the Group 600, all of them are on a rise, and you can't see that much of a difference between a CAC 40 or a FTSE 100. Now, President Joe Biden has vowed not to let the U.S. default on its debt. In his State of the Union address, the American leader urged Republicans to find common ground on the issue. Bloomberg's Jennifer Zabazaja now joins us. So, Jen, great to speak to you. I mean, it was quite riveting. It was quite exciting, I guess more than usual. Talk us about the highlights.
Yeah, Fran, I mean, I think what was notable was President Biden really sort of stepping into this role of president 2 years in and really going after a lot of his own economic wins. He spent a majority of his speech touting his own economic agenda, his wins over the past 2 years. He noted some 300 bipartisan bills that he has passed, but also talked a lot about the kitchen table issues that a lot of the middle class in America care about. So things like Medicare, things like gas prices, things like food prices, and specifically, you know, talking about some of his own proposals for the economy when it comes to things like raising a tax on stock buybacks, a millionaire tax, and also what he called the reported record profits from the oil and gas industry. So really trying to evoke the sense that he is looking out for the middle class. He said the middle class wins. When we all win, the middle class wins. So really that was the message that he was going for.
Yeah, and he was rallying the troops, right? It's kind of like about getting consensus and this unity plea. Will it work?
Yeah, I mean, he was heckled a good amount of times from Marjorie Taylor Greene. But you know what? He took up that opportunity to really go against some of these colleagues, but also calling for more more unity, as you mentioned, calling for opportunities to work together with House Speaker Kevin McCarthy on things like taxes, on things like social media, big tech, on advertising, on things like tickets. Of course, we know the Ticketmaster saga that had happened. And so, you know, he really made it a point to suggest that, you know, he is willing to sit at the table with his opponents, but also those who are willing to be there with him and wanting to see the country sort of rise up from a lot of the hardships that the country has seen, in particular when it comes to police reform, violence, abortion, and other issues like that.
Jen, what can you tell us about the Chinese balloon? So this really has been dominating the headlines.
Right.
And then we thought that the two countries maybe would speak on the phone about it.
Right. And we thought that President Biden was going to speak a little bit more about it. He touched on it, specifically saying that this happened a few days ago, and that if and when the U.S. is threatened, as he called it, the U.S. will respond, which is what he said. But most notably, what we heard from U.S. National Security Council spokesperson John Kirby about this balloon incident, this alleged spy balloon, is that the remnants have been recovered, and there's no plans to return this to China. And as you mentioned, this call that was supposed to happen, U.S. officials say that China has declined and offered to talk about this call. So, of course, this is not something that's going to go away anytime soon. The president noting that competition with China is stiffer than ever, and it's going to continue going forward.
I mean, I don't know whether we're already in an election cycle, but it feels like it.
Right.
Is China going to play a dominant role? And so does, you know, the Biden handling of this also impact on 2024?
Right. I mean, I think a lot of people are calling this sort of his pre-election, pre-2024 speech, especially considering how energized he was about some of these issues. And really, when you think about some of the key themes that he talked about, especially when it comes to China, talking about threats to democracy, saying that over the past 2 years, and he talked about the Russia-Ukraine war in particular, that democracies win over autocracies. And so this message, surprisingly, was a winner inside of the chamber. And so I think he's going to continue using that message and talking about this, even when it comes to jobs. He talked about jobs originating in America. Of course, we know the CHIPS Act that he has pushed for, semiconductors originating in America. And so today we're supposed to see him in Wisconsin. He's going to continue talking about some of these jobs. His administration is going to be on the road. So it's really going to be indicative of what they're going to be looking for going forward.
Jen, thank you so much as always. Jen Zabazaja there with the very latest on the State of the Union address. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Turkey has declared a 3-month state of emergency in areas hit by 2 massive earthquakes, giving the government more leeway in rescue and reconstruction efforts. Emergency teams are racing to save people who may still be trapped after Monday's earthquakes. The number of people confirmed killed across Turkey and neighboring Syria is now approaching 8,000. France has adopted a law to accelerate the development of renewable energy, though some critics say it will actually slow onshore wind and solar projects. Parliament passed the measure to reduce France's dependence on fossil fuels. Unions, meanwhile, held a 3rd national day of strikes against raising the retirement age. The government says about 750,000 did take part. Now that's down from more than 1.25 million the last time. The Pentagon says China refused a call from the US to discuss a suspected spy balloon, which was shot down over the weekend. A Defense Department spokesman says talks with China's defense minister were being sought. The US says the balloon was carrying out surveillance, while China maintains it was a weather monitoring device that did blow off course. And basketball star LeBron James has overtaken Kareem Abdul-Jabbar as NBA's all-time leading scorer. The LA Lakers broke the record, which has stood for nearly 40 years, with a shot against the Oklahoma City Thunder. Tickets for the game were being offered for almost $80,000 each on the resale site StubHub. Global news powered by more than 2,700 journalists and analysts over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine, despite him breaking the record, the LA Lakers still managed to lose that game.
Yeah, it is pretty incredible. Now, let's stay with football, yeah, because we're just getting some breaking news out of Manchester United, which we probably need to bring to our viewers. Manchester United shares, I don't know if we have the share price, are up some 12% in U.S. pre-market trading. This is after the Daily Mail broke a story that some Qatari investors will bid for Manchester United within days. The Daily Mail reporting that they are pretty confident of blowing competitors out of the water. Now, I would say two things. First of all, look at Man U, gaining some 13%. They had a pretty large presence in Davos. We also caught up with Avi Glazer, of course, the owner. He would not really be drawn into whether it was 100% for sale. He kept on repeating that, they had options. We also caught up with the Qatari Investment Authority in Davos, and they said, look, if you look at football, it's something that could represent an opportunity. For me, it's unclear now whether it's high-wealth individuals based in Qatar that would make a private bid or whether it would be through the Qatari Investment Authority. On the back of whatever it is, on the back of that Daily Mail report, Man U pre-market 13% higher. Now coming up, Powell signals more hikes ahead as he says disinflation has barely begun. We delve into the market reaction next, and this is Bloomberg.
The best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do. Here in the UK, Rishi Sunak's mini cabinet reshuffle has left Conservative MPs unconvinced it will do enough to reset his premiership. So we round up the full UK news. I would say, look, there are three news that we really need to keep on top of. First of all, it is, of course, a cabinet reshuffle. It sees Kemi Badenoch, foreign secretary, now becoming the business secretary. But two other big stories today. First of all, the Ukrainian president, Volodymyr Zelensky, is visiting the UK today to meet with Rishi Sunak. And this is extremely, of course, important to see whether this will lead also to more arms and things like that. And then the third big story is, of course, Manchester United. The Daily Mail breaking the story that the Qataris, unclear whether it's a sovereign wealth fund or a group of wealthy individuals, will make a bid for Manchester United. On the back of it, pre-market Man U, or United, as the fans keep on telling me I should call it, gaining 12%. But let's get back to the cabinet reshuffle. With us, Bloomberg's Leanne Gerrans. Hi, Leanne. So what does a cabinet reshuffle actually tell us about Sunak's leadership?
Hi, Francine. So if I have a look, and if we look at this cabinet reshuffle that did happen yesterday, it just seems to appear more procedural than it does seem to be politically punchy at all. And it is left MPs in the Conservative Party a little bit puzzled that this is really going to reset the Prime Minister, Rishi Sunak's premiership. So yesterday we did see him really break up these big 4 government departments into 3 separate departments. This seemed to be a strategic move by the Prime Minister, Rishi Sunak, because he does really want to concentrate on energy security and also science here in the country. So we did see him break up that sprawling government department of business, energy and industrial strategy. And this, Francine, has been criticized by government officials as being ineffective.
Yeah, Leanne, we'll see exactly where this ends up too, but if you speak to investors, they do find it a little bit underwhelming. Thanks so much. Our Leanne Gerrans there with the very latest on the UK cabinet reshuffle. Now, Joe Easton from our equities team is also here looking at some of the UK stocks that he's keeping an eye on. What do you have, Joe?
That's right, Fran. So finally, we've got a bit of positive news over in the home builder space, with Barratt Developments reporting a bit of an uptake in their private sales in January, according to the firm in a statement today. This stock obviously has been weighed down by those mortgage worries, with the interest rates potentially spurring a downtick in demand. That stock, though, up around 2%, following some easing concerns around sales. I'm also looking at Smurfit Kappa. Believe it or not, this has very little to do with Smurfs. It is actually a box company based in Ireland, but also listed in London. One of the best ways to judge the strength of an economy is how many boxes we're selling, given the online retail exposure there. That stock, though, down today, underwhelming according to analysts. They're also worried about a bit of an uptick in the energy prices for the company. And, as I mentioned, demand for boxes coming down as the recession takes hold. I also want to revisit BP. It's been a remarkable 2 days for that stock, surging 8% yesterday and up around another 3% as well today. They had that big buyback news yesterday and also increasing that dividend. Analysts at Barclays today giving BP a 1,000 pence price target, meaning it could almost double from where it is now. That's pushing up the FTSE 100. All of the gains that we saw yesterday in the FTSE were pretty much coming from BP. It also lifted Shell. More scrutiny on that company, given all the money they're returning to shareholders and potentially a bit of a lesser focus on renewables. But BP having their best 2-day gain in around 2 years today, Fran.
Yeah, thank you so much, Joe Easton. I also need to correct myself, actually, because Kemi Badenoch was Secretary of State for International Trade, so I think I misspoke. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. We look at UK businesses, we look at politics, and, of course, we look at the cost of living crisis. Coming up, Jay Powell signals more hikes ahead as he says disinflation has barely begun. We delve into the market action and reaction next. This is Bloomberg. Amazon acquired Zoox back in January 2020 for what reports suggested was $1.2 billion. Since then, the company has revealed its Zoox vehicle. This is, I think, a rectangular passenger-focused vehicle with no driver's seat or steering wheel. How would you describe it?
would describe it as a purpose-built vehicle, but it's really a robo-taxi. That's its purpose. And essentially, it's about transporting people from point A to point B on demand in the most effective, cleanest, and most enjoyable way.
So why won't you call it a car?
Because a car is, there's an inference that there is a driver. Whereas in our robo-taxi, there is no manual driving. A human cannot really drive it to transport passengers. So we want to make sure that that mindset, that shift, that distinction is clear.
The complicity of the international finance institutions, including particularly Goldman Sachs, is there. Otherwise, one MDB wouldn't have happened. You can't just get away and by ignoring your moral responsibility. And I think Goldman Sachs should come out clean and deal with Malaysia.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Fed Chair Jay Powell says the central bank may have to hike more than what's priced in if the U.S. labor market actually remains strong. Now, Powell was speaking to Bloomberg in his first speech since the latest FOMC decision.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Well, we're now joined by BlackRock's Global Chief Investment Strategist, Wei Li. Wei, thank you so much for joining us. I have like a million questions on earnings, but maybe let's start with central banks. Yeah. Is Jay Powell just always a little bit more hawkish to make sure that the market gets it right, or is he really more hawkish?
Well, if you look at market reaction yesterday in response to his speech, we really had a bit of a whipsaw action. It rallied and then it fell and it rallied into the close. It shows to me that there is a bit of everything in his speech that markets can speak to and react to. But if you look at kind of the last 10 days after the Fed meeting, it would appear that the Fed and central banks more broadly may have entered a more nuanced stage of inflation fighting. Previously, it was inflation fighting at all costs, and now we're talking about quite a bit more nuanced. If you look at the Fed and Jay Powell, somewhat hesitant to push back against the financial conditions.
But wait, what does that mean for markets? So is there a bigger chance that they get it wrong because of the nuance?
Well, if you look at market price action so far this year, is priced for perfection, right? It's priced, we're not talking about soft landing versus hard landing, we're talking about landing versus takeoff, and markets are priced for takeoff. So we're not saying that that scenario is not possible, but a lot of things will have to go right for that to happen, and actually risks are skewed to the downside at this juncture given pricing. And then what then happens depends on Fed's reaction mechanism, how determined they are to fight inflation at this point, and also depends on inflation. If you look at core service ex shelter, we're still running at 4.7% in the US. US labor market very, very tight. Wage inflation, we're talking about 4-5%. You know, all of that points to we're not on track to settle at 2% for inflation. Even Jay Powell yesterday, he said that this inflation will not be painless.
Yeah, and we also had, for example, a Goldman call, which I think is along the lines that you were thinking about, the oil at about $100. So are we going to import a lot of inflation with the China reopening?
The Chinese economy reopening certainly adds to the global inflationary dynamics. In fact, in our assessment, if the Chinese economy didn't open as fast as it did, as it seems to be doing right now, actually oil price would have fallen a lot more than what we have seen so far. And now you talked about kind of oil price inflationary pressure. What we have seen so far in terms of inflation decrease year to date has been driven by goods, has been driven by energy prices, but it can only go for so long that these factors drive inflation down. At some point, it will be all about service inflation, and we think that service inflation, core service inflation, is going to be persistent, and we're on track to settle at 3% rather than 2%.
Wait, talk to me a little bit about the earnings. So we have a lot of earnings. It seems to, margins and cost cutting is still where the companies that do best are doing. Is that going to change anytime soon to accommodate for more growth?
What is really interesting is that earnings are certainly so important, but it seems to be playing second fiddle in terms of influencing market reaction than central bank response mechanism. So we're looking at how some companies that missed their earnings were outperforming companies that actually beat their earnings early on in this earnings reporting season. Currently, there are margin pressure, margin coming under pressure, signs of that coming through. If you look at sales growth, actually, they are outstripping earnings growth. That is a sign of margin coming under pressure. But markets are not paying attention to that. At some point, we believe that focus will shift to fundamentals and earnings, and currently markets are still too optimistic in pricing earnings versus our expectation for a mild contraction for U.S. equity markets.
What are you waiting for it to happen in the UK for you to go in? So for the moment, you're still underweight. I don't know whether there's going to be a turning point. The Bank of England last week was a little bit less nervous and very cautious, but maybe a bit more optimistic.
No, that's right. That is a similar tone as what we picked up from Madame Lagarde, as we picked up from Jay Powell as well, in terms of, maybe we could avoid a recession. I think that broadly speaks to this soft landing narrative getting more priced in by markets so far this year. But the environment facing central banks, the tough trade-offs facing central banks, that if you want to bring down inflation, you have to incur a mild recession. That hasn't changed. To quote Jay Powell yesterday, this inflation will not be painless, and I think that applies to the Bank of England as well, and that's also why we are somewhat prudent in terms of UK assets priced also for perfection, which is also why we prefer emerging markets at this juncture.
Wait, do you worry that actually we just don't really know what to do with this tight labor market? We haven't really been in this kind of environment ever.
That's right. I mean, the last time unemployment rate is this low is 1969. So really, we're really talking about really tight labor market. We're not talking about super hot labor market, because labor market is not so much because of economy overheating, but rather because of supply constraint. And that is not going to go away anytime soon, because if you look at recent years of participation rate decline in the US, is all explainable by aging demographics. That's not just in the US, that's not just in developed markets, that's also globally, including in China. So aging demographics is going to be one of the reasons that inflation will settle at a higher level versus pre-pandemic levels, and that's why we're living with inflation in this environment, and that's why 3 is the new 2.
Wei, thank you so much. Always smart. Wei Li, BlackRock Global Chief Investment Strategist, joining us this morning. Coming up, we talk earnings and travel trends with the Trivago Chief Executive, Axel Hafer. That's next. This is Bloomberg.
very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Jay Powell reiterates the need for hikes, but holds off criticizing looser financial conditions. Stocks and futures climb. President Biden vows the U.S. will pay its bills on time as he calls on Congress to raise the debt ceiling in his State of the Union address. Plus, sources say Credit Suisse will pay some of its junior and mid-level banker bonuses in installments as part of its broad overhaul of operations. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Trivago has reported earnings per share for the fourth quarter that missed the average analyst estimates. Referral revenue at the online room reservation specialist missed estimates in both the Americas region and in developed Europe. Well, Trivago has also flagged that while city destinations are growing in popularity, particularly in Europe, travelers are trading down hotel star categories. Well, I am delighted to be joined by the Trivago Chief Executive, Axel Hafer. Axel, thank you so much for joining us. So how is the way we're traveling changing?
So how is it changing? I guess it's getting more expensive. Yeah? So we've seen that in 22 already, and that is continuing in 23. And what is happening is what you would expect, that travelers are trying to recover some of those costs by going to cheaper destinations, by going to cheaper places, so trading down on star categories, and also by cutting down the length of their trips.
So what does that mean in terms of what the summer season is looking at? Are people traveling at different times? And how does that change? Is it almost a direct cost of living crisis that you see getting better in maybe 12 months when inflation gets better?
So the way we are looking at it, and of course, I mean, nobody really knows because it very much depends on the economic outlook and what exactly will happen over the next 12 months. But we do expect that people will continue to travel, and we've seen it really in the pandemic that travel, and I guess we've all experienced it, is really a basic need. You need to get a break from time to time, and that the inflationary pressure that you see on the room nights in particular, the people will partially compensate that by changing their travel patterns, but not to a very radical degree. Yeah? So we're talking about percentage point changes in behavior.
I like your background, Axel. It makes everyone want to dream and go away. Are you seeing Chinese travelers return?
So we don't operate in China, but we operate pretty much everywhere else in Asia. And what we do see is that the travel into China has surged from pretty much all of our Asian platforms. We do also expect hotel prices in the other Asian countries to go up as there will be more demand coming out of China.
Are people staying more domestically? So overall, if you're UK-based, do you do more domestic trips as, you know, wages and everything is changing or are a bit uncertain? And what does that mean for where you want to be? How close do you want to be to your customer?
Depends very much by market. I mean, so we've seen in the pandemic a general trend to domestic travel, but that was more driven by the uncertainty that you would experience by going abroad. With the pandemic being over, there is in the UK, there is still some trend to domestic travel, which we think is more driven by the exchange rates and the exchange rate development. Other than that, the patterns have more or less normalized, and people are happy to go abroad again.
When do you see a pickup actually in going abroad again? So if holiday spending at the moment is under pressure, what, you know, if it's weakening and if you're expecting to weaken for the foreseeable future, what's the trigger for it to get better? How difficult is it to point at that?
I mean, to be honest, it's very difficult to predict exactly what will happen from an economical perspective over the next 12 months. Our expectation is that we will see a soft landing in the US and, you know, probably slightly more negative outlook in Europe. And with that, we expect overall spendings to go up. But if we're talking about a more negative scenario, you could also have a more negative outlook. So it's very difficult to foresee what exactly will happen, and the visibility last year was greater, to be honest.
Axel, give me a sense of, for example, you know, one of the trends that you've identified is that travelers might choose hotels with 2-3 stars, so cheaper options that, you know, are still well rated and maybe offer more of a 4-star experience. If this is a trend over 12 months, maybe 24 months, does it actually impact the type of hotels that are also going to be open in the future?
I mean, it should if the trend will continue for a very long time period, but I don't think that's realistic. I mean, we expect this more to be a temporary trend where people are trying to save in the next, as we said, in the next 12 to 24 months, but will not change their behavior permanently. And once the salary or real salary development has improved, that they will go back to their old preferences.
Yeah, so searches of Dubai, and this is something that, you know, maybe gives us a bit of a glimpse into a specific concern. So searches for Dubai significantly down compared to pre-pandemic. Why do you think that is?
I mean, Dubai is one of the top destinations, in particular for the UK market. It's still a very popular destination. I think that what we are seeing right now is driven by the exchange rate. It's just got more expensive. Overall, it is more expensive because everything is more expensive, but also relatively speaking, for a UK traveler, it got more expensive to go to Dubai.
Do you see, as a lot of Europeans are becoming more cost conscious, do you see any of them actually, you know, abandoning vacation and travel completely? And is this something that could happen?
I mean, for sure, that will happen for some travelers and some people that they will stop or they will not travel. But generally speaking, we don't really see that, and we don't expect that to happen. I mean, the travel is really important and is really a basic. Right?
All right, thank you so much. Yep. Thank you so much, Axel Hafer there, the Chief Executive of Trivago, joining us this morning. Now, Equinor has increased its quarterly dividend after posting higher than expected fourth quarter earnings from strong gas and power sales. Now, Norwegian energy giant also announced a share buyback of up to $6 billion for 2023. The Chief Executive Officer, Anders Opedal, spoke to Bloomberg TV.
2022 was a very special year with the energy crisis, and we really stepped up our production, and we've turned every stone we could to really see how we could increase the production. We increased it by 8%, as you mentioned. I think this is at the very high level. So increase it very much higher than that will be very difficult. But I can tell you we are doing everything we can to make sure that we secure energy to Europe in this energy crisis.
Mark. Anders, good morning. As kind of you said there, you've managed to increase production to a record level, but to kind of follow on Anna's point, how much of a problem is it to maintain at these levels? I understand you can increase it further, but in terms of security risks, maintenance costs, can you maintain these levels? And I guess as a tangential question related to that, what do you expect to happen to natural gas prices in 2023, given they're down about 25% year to date already? I know they're very volatile. Do you expect increased downside, and will that impact your production?
Well, yeah, we are guiding today on a production increase of 3%. That is also with liquids, of course. So we will do everything we can to kind of keep up the production. Our maintenance schedule will go on as planned, and you know, energy security for Europe is our first priority. So that will continue. Regarding the gas market, I think we see a kind of unprecedented warm winter at the moment that is keeping Europe more safe in terms of having enough gas for this winter. We also see that the storage fillage will come up to normal levels and the EU levels also next year, but that will depend on a further demand reduction and also that a huge amount of LNG imports. So I think the LNG prices will really be the price setter for the gas in Europe over the next years.
Okay, so we'll watch the LNG price carefully. Thinking about product away from oil and gas, renewables obviously a big theme within the industry. Where are you setting your ambitions here? Because one analyst over at Sberbank described your ambitions for 12 to 18 gigawatts of renewables by 2030 as looking too optimistic. How do you convince the market, or have you changed those expectations?
Yes. Now, we always believed in a balanced energy transition where we both have to invest in oil and gas and renewables, and we set an ambition of 12 to 16 gigawatts in 2021. We are progressing towards that ambitions. We have 14 gigawatts accessed, and we have built up a portfolio so that we have much more flexibility in our portfolio now to choose the best projects going forward.
Right, and what's the breakdown of the investment then in both of those? Because we spoke to BP yesterday, they were very clear to describe 50% investment in oil and gas, 50% investment in renewables, doing both, it's and not or. What does the breakdown of your investments look like?
The majority of our investments, we guided on $10 to $11 billion in capex for 2023. The majority, it's still oil and gas, around $8.5–9 billion US, and that will be stable over the next years. And we will gradually increase our investments in renewables.
Well, that was Equinor Chief Executive Anders Opedal speaking to us earlier off the back of earnings, shares soaring in the morning on the back of those results. Coming up, Bonus Blues at Credit Suisse will bring you the latest twist on the firm's handling of compensation and how additional measures on new client wealth in Asia sparked a revolt. That's coming up next, and this is Bloomberg.
No one can claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
We've had 2 years that have been absolutely exceptional. And during those 2 years, we saw a lot of customers actually order probably ahead of demand because they really wanted to meet the sales that they could have. As the world became a bit more normal after the pandemic, we've seen some of these demands slow down. We've seen this correction start to unfold already since September, and we expect it to continue here in the first half of the year. And that certainly will trigger a correction in earnings across the markets that we operate in. It creates also a lot of opportunities for us to continue to serve our customers, but it is a much more normal world we're heading back into. This inventory correction has meant a sharp decrease of imported volumes into mainly Europe and North America, and that has triggered this adjustment. This will continue, we expect, for another quarter or two before demand firms up again. What has triggered our guidance is the fact that on the back of this inventory correction, we're also seeing supply side risks as a lot of new tonnage is going to be phased in the second part of the year, which certainly creates some caution and some volatility towards the second part of the year.
Well, that was Vincent Clerc, Maersk CEO, speaking to Bloomberg after earnings. The share price for Maersk, I think, there you go, gaining still in today's trading session, 2.4% higher. Now, sources tell Bloomberg that some of Credit Suisse's junior and mid-level bankers will get their bonuses paid out in installments. The news really adds to tensions at the bank as it seeks to overhaul its operations after a series of scandals and deep losses. Well, joining us now is our Zurich-based finance reporter, Marion Halftermeyer. So, Marion, good morning. Thank you so much, as always, for joining us. What do we actually know for these bonuses? If you're a junior banker and you say, look, we're going to give you this much in the next quarter, and then you have to wait for July and October, I mean, people are not going to be happy about this.
Branson, people have not been happy for the last 2 years over bonuses at Credit Suisse. It is a big problem, but the bank is grappling with how to compensate their bankers when they are losing a lot of money. They're undergoing a really difficult restructuring, and they are also trying to retain bankers by doing these sort of out-of-cycle retention payments. So the pool and the amount of money they can allocate to the employees across the board is shifting and very difficult to allocate. And so this is what you're seeing coming through with all these different types of ways they're trying to placate different bankers. Of course, for the junior bankers that they want to retain, that's the talent that's going to be coming up in the next couple of years. This doesn't look good.
So, Marion, I mean, meanwhile, and we'll talk a lot about this because you kind of wonder whether there's maybe a third party involved, which is why this seems all of a sudden that they're, thinking about bonuses going forward. We've also had some news that the lenders dialing back some of the stringent anti-money laundering controls in Asia. Why?
So this stems back to a program that they were trying to install more anti-money laundering controls, tighter controls, particularly in their Asia wealth business. It goes back to the 1MDB days, where they had been sort of, flagged by regulators that their compliance was not as up to par as it should be. But that has had sort of a reverse effect where it's been overly stringent, and clients and the bankers themselves are saying this is difficult to get any business done. We can't get any clients in the bank. And in particular, in the context of what's going on right now, they've had massive outflows from clients. And so it's a bit of a difficult way to say, well, try to get more money into the bank, but at the same time, we're going to make it impossible for you to get the money into the bank. So that's why they're dialing that back now. Let's be clear, it doesn't mean that they have erased anti-money laundering controls.
Yeah, really interesting. Thank you so much. Of course, one of our lead reporters actually on Credit Suisse, our finance reporter in Zurich, Marion Halftiffmeyer. We'll have plenty more on Credit Suisse, and then we'll also be in Zurich tomorrow when Credit Suisse earnings come out. We're also getting some breaking news out of Adani Enterprises. Now, it's been a wild ride for Adani Enterprises. It was down 20%, and today it's actually gaining as much as 20% after this rally is continuing, really powering ahead. We could or not hear from the Prime Minister of India shortly on Adani. I know he is meant to speak to a lot of, Parliament, basically. So we are expecting him to maybe say something on Adani because of the closeness he has with the founder of Adani. Hedge funds and distressed debt specialists have really scooped up bonds related to Adani's business empire, I think in the last 2 days or so. And that was a potential sign of encouragement for the group as it really tries to shore up confidence in the wake of this scathing short seller report. On the back of that, so you can see over the 20-day period, it's still down 40%, but in today's trading session, it's gaining 20%. So let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A number of hedge funds and distressed debt specialists have scooped up bonds related to Gautam Adani's business empire in a potential positive sign for the group. Oak Tree Capital Management, one of the world's largest opportunistic debt firms, is said to be among those buying paper in the recent weeks. Now, Jerome Powell is sticking to his message that interest rates need to keep rising to quash inflation. Speaking to David Rubenstein at the Economic Club of Washington, the Fed chair says borrowing costs may reach a higher peak than the market anticipated. Powell says the U.S. labor market remains extraordinarily tight, warning the battle against inflation won't be quick or easy. Total Energies is raising its dividend and will buy back another $2 billion of shares after reporting record profits for 2022. Adjusted net income at the French company was just under $7.6 billion in the fourth quarter. That was in line with expectations as oil and gas giants are hit with windfall taxes in many countries. Total says its global tax bill more than doubled to $33 billion last year. And Zoom shares jumped on the news. It's cutting 1,300 jobs as it looks to restructure, faced with a slower post-pandemic growth. CEO Eric Yuan says headcount tripled in 2 years during COVID. The cuts amount to 15% of Zoom's workforce. In a blog post, Yuan calls himself accountable and says he will reduce his own pay and forgo his bonus. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, we'll have plenty more, of course, on Turkey declaring a 3-month state of emergency in areas struck by 2 massive earthquakes, with President Erdogan set to visit affected areas. We'll bring you the latest. This is Bloomberg.
is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000 what would you say that person should do with 100,000 to put in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Turkey has declared a 3-month state of emergency in areas hit by 2 massive earthquakes. It gives government officials greater power in rescue and reconstruction efforts. Now, the number of people confirmed killed across Turkey and neighboring Syria is now approaching 8,000. We're joined by our Turkey Bureau Chief, Onur Ant. Onur, I have to say the pictures are absolutely horrific coming out of Turkey. What's the latest on the ground in Turkey and Syria?
Well, President Erdogan is going to be at the disaster zone for the first time since 2 earthquakes struck Turkey's southeast. As you said, the death count in Turkey alone is now above 7,000, and more than 1,000 are confirmed dead on the Syrian side of the border. But many, many more are trapped, at least on the Turkish side of the border. We estimate, well, authorities estimate that the number of buildings that collapsed is about 11,000 people. Rescue operations are underway despite freezing temperatures, with teams from both Turkey and dozens of other countries are at the scene. And soldiers, thousands of them, have been mobilized overnight to provide both security in the affected areas and help with rescue operations.
Yeah, and of course we're seeing the human cost. We're seeing also, stories of resilience with, some of the white helmets that have been able to save people and children through the rubble. Do we have a sense of the economic impact from this disaster yet?
It's difficult to have a definitive figure on the economic impact, of course, but according to a preliminary analysis by Bloomberg Economics, focusing on a part of the affected area, the cost of reconstruction can go as high as 5.5%, whereas 5.5% of GDP, whereas some economists also point out the fact that in such reconstruction efforts, because buildings that collapse don't really deduct from GDP, there's usually some rebound in GDP, economic activity as well, although with a delay. In addition, we see the banking sector's exposure to loans in the area is about $30 billion. And also, quakes triggered a rout in Turkish stocks market, and Borsa Istanbul today announced that all trading on the main stock exchange was suspended until further notice.
Thank you, Onur. Of course, Onur Ant, our bureau chief in Turkey. We'll have plenty more from Onur and the team on the ground throughout the day and in the next days and weeks as we continue watching some of the, well, first of all, the rubble, some of the saving, hopefully, of people that are still under there, and then the reconstruction. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons are in New York. Anna Edwards is here in London, and this is Bloomberg.
wrong, and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and then it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg Daybreak with Lee. On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
We're not going to be moved into being threatened to default on the debt if we don't respond. If we could work together the last Congress, there's no reason we can't work together and find consensus on important things in this Congress as well. I stand here tonight after we've created, with the help of many people in this room, 12 million new jobs. More jobs created in 2 years than any president's created in 4 years. We have more to do. But here at home, inflation is coming down. Make no mistake about it. As we made clear last week, if China threatens our sovereignty, we will act to protect our country, and we did.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. President Biden baits Republicans and taunts China's Xi Jinping. We'll look at the president's State of the Union address. A warning from Fed Chair Jerome Powell. He says interest rates need to keep rising if the central bank is going to quash inflation. And SocGen misses its own payout promise. The French bank fell short of a pledge to pay half of its profit to shareholders. Meanwhile, sources say Credit Suisse will pay some of its bankers' bonuses in installments as part of its broad overhaul of operations. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kaylee Lines in New York. Matt Miller is off today. And Kaylee, we had the words of President Biden, of Chair Powell, all of that being digested by markets. Here in Europe, the focus very much on earnings.
Yeah, there's definitely a lot for the different markets to pay attention to, and specifically President Biden's comments on China was something Asian traders were definitely taking note of. I would note it was a pretty mixed session in Asia overnight. You had stocks just fractionally lower in China and in Hong Kong, but you had big gains in markets like South Korea. So that led the MSCI Asia Pacific Index as a whole up by about 0.6%, with the Kospi higher by about 1.3%. On an individual stock basis, though, we have to keep an eye on Adani Group because the rebound is continuing across most of the stocks tied to that conglomerate. The flagship Adani Enterprises up 23% today
after a gain of near 15% yesterday, which was the best day for the stock since 2020. It looks like we will top that today. So you're starting to see a recovery taking shape as the company is looking to address leverage concerns, repaying some of its debt. That seems to be going at least a little way towards soothing the concerns of investors we have seen come to the surface in the wake of the Hindenburg report over the last several weeks. And then in foreign exchange, I would just point out that the yen once again strengthening against the US dollar after a 1.2% gain yesterday. We're stronger by another 0.25% or so. Dollar yen trading at 130.76. Meanwhile, here in the U.S., as Anna alluded to, it really was all about the comments from Chairman Powell yesterday, which frankly weren't all that different from what we heard in the press conference after the Fed decision last week. Not too much changed even in the wake of that strong jobs report from last Friday. So that actually led a rally in equities yesterday. We snapped a two-day losing streak, but this morning it doesn't seem to be holding, with futures lower by about 0.25% on S&P 500 E-minis. In the bond market, we are seeing Treasury yields moving a little bit lower, down about 2 basis points on the 10-year to 364. But remember, after the Fed decision, we were down at 339 or so. So it still has been a big move higher over the last 4 days or so. And we've also seen a big move higher in the commodity complex, specifically crude. WTI at more than 4% yesterday. We are adding to that today, up another 1.4% to 78.21. Bitcoin, meanwhile, Anna, literally flat, just north of 23,000. But of course, we have a special Wednesday edition of Bloomberg Crypto coming up at 1 p.m. Eastern.
Absolutely, something to tune in for on the crypto space. So, Kaylee, here in Europe, we are focused on the earnings story and with catch-up with what happened on Wall Street. Kaylee nicely explaining there what happened post those comments from Jerome Powell, not really changing his message post-jobs, and that was enough for the markets to rally stateside, and that's been filtering through into the European session today. So European equity markets lifted by some buoyant earnings and indeed by playing catch-up. Elsewhere, I just want to draw your attention to yet again another a day where we're following all of the story coming out of Turkey that we just saw on the map there. It was very much in red, but that was because we'd seen a lot of selling on that market. Trading in Turkey on the Istanbul exchange now closed, actually. They've suspended trading there as they are still very much in the depths of that rescue mission in Turkey. President Erdogan making plans to visit the earthquake site. This is back to the markets then. This is what we have on European markets, up by 0.9%. As I say, lifted by some of those earnings stories. This is the German 10-year yield in here for you. We've got the euro in focus at 107.53 on the back of what has been actually quite a weak story for the dollar, which is interesting in itself. Dollar weakness kind of in keeping with the risk-on tone that we're seeing here in Europe, not really in keeping with the risk-off futures picture, which we see on US stocks. And Brent crude at 84.65. We've actually seen quite a substantial move higher in oil prices in recent days, overshadowed by other news perhaps, but certainly that's been something that we are watching. Kaylee?
All right, Anna, well, let's turn back to the story here in the United States, where President Biden used his State of the Union address to lay a trap, and House Republicans walked into it. One of them, Representative Marjorie Taylor Greene, began heckling the president when he said that some Republicans supported sunsetting Social Security and Medicare.
Instead of making the wealthy pay their fair share, some Republicans want Medicare and Social Security to sunset. I'm not saying it's a majority. Let me give you, anybody who doubts it, contact my office. I'll give you a copy. I'll give you a copy of the proposal. That means Congress doesn't vote. Well, I'm glad to see you. No, I tell you, I enjoy conversion.
For those listening on radio, you can see Marjorie Taylor Greene mouthing the word liar multiple times. Jack Fitzpatrick of Bloomberg Government joins us now in D.C. for more. So, Jack, was it as much about what the president said last night or the response he elicited from the other side of the aisle?
Yeah, the mid-speech debate was really the most important part of it. For what it's worth, he was pretty clearly referring to the plan put out a little while back by Rick Scott, maybe the most uncomfortable person in the room in that moment, who had put out a plan to sunset laws after 5 years, no exceptions, including for Social Security and Medicare. And there are a number of other proposals tied to the debt limit debate that could have gotten them into a discussion about the solvency of Medicare and Social Security. So definitely the action by the president to slam the door closed on any discussions on entitlement solvency as it relates to that debt limit debate and getting Republicans to cheer for it effectively. It wasn't just Marjorie Taylor Greene. It was a lot of Republicans jeering that statement and then him getting them to vocally agree that they were absolutely off the table. Usually you don't see real-time negotiation on a debt limit measure in the middle of a State of the Union speech, but that was definitely the most notable part of this one.
Yeah, really interesting then, and a sort of a sense that this is what we can expect more of, perhaps, Jack, as we get towards the deadlines around the debt ceiling. In terms of what was agreed upon or where there was any evidence of agreements between both sides of the House, there were a few items on that list, weren't there? But some on foreign policy elicited some bipartisan agreement, notably on China.
Yes, on China, mentions of competition with China. That is one area where there's quite a bit of bipartisan interest. There still is at this point also bipartisan support, especially if you look at sort of Republican leadership figures when it comes to Ukraine. The presence of the ambassador from Ukraine at the speech, definitely a bipartisan moment, despite any potential qualms with some figures in the House Republican Conference. So some bipartisan moments there. And President Biden has, the last couple times in the State of the Union, made a point of having a list of sort of lower hanging fruit policy measures that they all really could agree on: support for the National Cancer Institute, opioids. There was some debate over border security as it relates to fentanyl coming across the border, but trying to stop that. There were a series of policy measures and some previous accomplishments, including the infrastructure bill, and again, as it relates to China, the increased production of semiconductor chips. So a list of accomplishments that had bipartisan support, some goals that they absolutely could accomplish on the cancer initiative, for example, that has bipartisan support. Really a good bulk of the speech was along those lines, with a few notable exceptions.
All right, Jack Fitzpatrick, up early for us in Washington after a late night post State of the Union. We really appreciate it. Thank you so much. And we're going to have more on Biden's address later on this hour. Greg Valliere, AGF Investments Chief U.S. Policy Strategist, will be joining us for his take. Meanwhile, let's turn to monetary policy. Fed Chairman Jerome Powell is sticking to his message that interest rates need to keep rising to put down inflation. At an event in Washington, Powell floated the idea that rates may reach a higher peak than traders and policymakers anticipate.
The labor market report for January, it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. If we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
Joining us now is Bloomberg Markets Live editor Eddie van der Walt. So, Eddie, is the market hearing what it wants to hear from Powell, which is the same message that it already heard last week?
Yeah, it's pretty hard to see how the market took a dovish spin out of that. I mean, a lot of people are hanging this on the fact that Powell didn't say that financial conditions are loosening and therefore he's not pushing back. But he said that the labor market is hot. He said that inflation, might come in high, and that might mean that they would have to push rates higher. It is an overall hawkish message. The market seems to be saying, well, he didn't say Simon says, and therefore we're going to treat this as a dovish message. And that's absolutely just not the case. And I do think that sets us up for a little bit of volatility going further down the road.
Yeah, Eddie, on that subject, so the market's dovish view was tested last Friday by that jobs report. Could it be tested once again then by the CPI print we get on December 14th?
I think so. I think the Valentine's, I absolutely can't mention February 14th without mentioning Valentine's Day. And I do think there is a risk that it comes in really hot. I don't think this is going to be a love letter to the market. I think this is well, whether or not this one comes in hot or the next one comes in hot, I think there is a risk that at some point we get that out of line surprise, and everybody's positioned dovish at the moment, and therefore that we get a significant shock to the markets as we go into any negative reading.
Okay, a lot to watch then on the data. Thanks very much. Bloomberg Market Live's Eddie van der Veld with the latest on the Fed here in studio. Now turning to banking news, France's Societe Generale fell short of a pledge to pay out half of its profit to shareholders. That's despite a bigger than expected profit from fixed income trading. And over in Zurich, Credit Suisse is adding to turmoil in how the firm handles employee compensation. Bloomberg's learned that the Swiss lender will pay bonuses in installments to some of its junior and mid-level bankers. For more on Credit Suisse, we're joined now by Bloomberg finance reporter Marion Halftermeyer. Marion, what do we know then about these bonuses? Another day, another story about the way that Credit Suisse is dealing with its staff, remunerating its staff.
Yes, what we've seen here is that Credit Suisse has changed the way they're going to be compensating bankers, and we've had a couple of different parts to this. So on the one hand, there's been delays in compensation conversations that were due to happen this week, and let's keep in mind that most bankers are getting their bonuses at the end of this month. And then on the other hand, we've seen them say, well, we're going to pay certain bankers in installments over the next couple of quarters, and that's not usual. So they've had to have some discussions around how they allocate bonuses due to the fact that they're losing a lot of money and they are trying to retain people. Now, part of the changes might have to do with the fact that they are carving out part of the investment bank into this new entity, and we're not quite sure what that will look like, and therefore that impacts how those bankers will be compensated.
Meanwhile, we've also had news today, Marion, that the lender is dialing back some stringent anti-money laundering controls in Asia. Why?
Yeah, so this one is a little bit different. Basically, it dates back to some compliance issues they had a few years back. Regulators had told them, look, compliance is not up to par. You need to have more anti-money laundering procedures in place. And so the bank sort of overstepped. And as a result of that, clients and bankers have complained, you know, it's too hard to get through these measures to do business with you. And that put into the context of the fact that a lot of clients are fleeing the bank makes it a kind of a dual conundrum of we want clients to come to us, but we're making it difficult for you to come to us.
Interesting. Bloomberg's Marion Halftermeyer in Zurich, thank you so much for your reporting. Now let's take a look at some other company and individual stock stories we are watching in pre-market trading here in the U.S. And I actually have to begin with Manchester United. It is surging the better part of 14% in the early trade after the Daily Mail reported that Qatari investors are looking to make an offer for the football club in the coming days. Reportedly, those are separate individual investors who want a full takeover, not just a stake. So that is lifting that stock significantly higher in early hours. Another stock that is significantly higher as well, and this is an earnings story, is Enphase. It's a solar equipment manufacturer, gave a better than expected revenue forecast for the current period, so that stock is up about 10%. And then finally, a less happy story, at least if you're an employee of eBay, is that the company announced it is going to be cutting about 500 jobs or 4% of its workforce as it contends with a sales slowdown. It isn't necessarily seeing a big reward for that in pre-market trading, as we have seen in some instances of these job cuts announcements. Right now, eBay is only up by less than 0.1%, Anna.
Okay, lots to watch then pre-market. Coming up on the program, we'll talk to Gurpreet Gill, Goldman Sachs asset management macro strategist for fixed income. What is she looking ahead to when it comes to the inflation data out of the United States? And what does she make of Chair Powell's comments yesterday? We'll also talk about European banking. We'll be joined by the ECB Supervisory Board Chair, Andrea Enria, who'll be with us to talk about the strengths and weaknesses of bank balance sheets here in Europe. Where does he need to focus his attention? Plus, seeking a supply chain overhaul, we spoke with the Maersk CEO about changes that they're seeing in the industry.
What we're seeing at this stage is a significant inventory adjustment. So we've had 2 years that have been absolutely exceptional. As the world became a bit more normal after the pandemic, we've seen some of these demands slow down. We've seen this correction start to unfold already since September, and we expect it to continue here in the first half of the year. And that certainly will trigger a correction in earnings across the markets that we operate in.
often claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority. Earnings season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number.
Blowing through estimates.
These guys are minting money with exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
Does this quickly become just a really crappy business model?
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Fed Chair Jerome Powell there speaking to David Rubenstein at the Economic Club of Washington. Joining us now, Gurpreet Gill, Goldman Sachs Asset Management macro strategist for fixed income. Gurpreet, we certainly saw a risk-on response at some stages of the US trading day, and by the end of the day, we'd seen stocks go substantially higher, as if the market took a fairly dovish interpretation away from Powell. Do you think that was right? Do you think the market took the messages it wanted to hear, or the ones it should have heard?
Hi, Anna. First of all, thanks for having me on the show. I would say that the market response is somewhat confusing at the moment. I guess they were responding to the fact that there was no added hawkishness in response to the strong labour market report. Powell largely stuck to the communication of last week's post-meeting press conference. He's acknowledging that disinflation is underway, but he's also saying that there is much more work to be done. And as it stands today, we think that the data-dependent Fed, in light of that strong jobs report, would likely deliver 2 more 25 basis points rate hikes in March and in May, but a lot can change between now and then. I think big picture we're in this regime where any resilience in labour market or activity data will see the market price out the prospects of rate cuts, but it's really going to take significant upside surprises on inflation for the market to price in a much more aggressive Fed path than they currently have.
Yeah, as we all try to understand what data dependence means in 2023, Gurpreet, it was interesting that one set of very strong job creation data out of the US does not elicit any kind of change of thinking at the Fed. I suppose reminding us that there's a difference between being data dependent and having to pivot on every single data point. We're certainly not in the latter camp. How does that set us up for CPI?
First of all, I'd say that is a good point, that the Fed is not going to be beholden to any one data point. But the big picture, which is more important about the strong jobs data that we're getting, is that it's not being accompanied by a large acceleration in wage growth. In fact, broader measures of wage growth are trending in the right direction. We've come from a high of around 5.5% in early 2022 to around 4.25% if you average across things like the employment cost index and average hourly earnings. And so we're around 2/3 of the way to that 3.5% wage growth level that is estimated to be compatible with 2% inflation. So I would say that is just a positive surprise of this unusual post-pandemic recovery, which is that Fed tightening appears to be tempering wage growth, but is not creating too much weakness in the jobs market. So jobs growth alone is not cause for concern. In terms of next week's CPI, I would say we tend to look at the 4 layers of inflation, so commodities, what's happening with rents, goods and services. Commodities progress has been encouraging. Goods, again, disinflation is underway, but I would caution that there could be upside to auto prices based on what we've seen in measures like the Manheim Index, which is a forward-looking gauge for what happens to prices there. With rent, we continue to see rents on new leases come down, and so we think over time that will extend to existing leases. And then for core services, that's where rebalancing of the labour market is really key. And as we saw from last week's report, progress has been slow.
So, Gurpreet, the idea that inflation may be more persistent, in theory, runs against this narrative that the Fed is going to turn around and start cutting rates in the not-so-distant future. If that is the assumption you are operating under, how appropriately priced are treasuries?
So we would say that we agree with your assessment there that a pivot to a pause is more likely than a pivot to easing. What we've actually seen is market pricing over the past week has converged to that expectation that we held. And so you've seen price cuts be removed from the market, and that is in line with our outlook. So today we still expect 2 rate hikes, like I said, and then a pause into 2024. But I would emphasize that a lot can change between now and the May meeting. We're going to have to see what happens to inflation data, what happens with the next jobs report, but also what the March statement of economic projections for the Fed shows. In particular, does that median dot plot projection evolve?
And when we talk about tightening, it's not just about the Fed hiking either. We also have to consider QT. How should we be thinking about that, Gurpreet? Because that's ongoing. That doesn't necessarily stop when the Fed pauses elevating rates.
Yeah, that's a great point. Look, we have no historical playbook for how the market will adjust to the global QT, not just Fed QT. We also have the ECB looking to start QT from March. And so I think what we learned from the UK episode last October is that it really depends on existing market conditions. It depends on the interaction with fiscal policy. And so QT in itself is just part of the broader policymaker objective of unwinding ultra-easy policies of the past to a new environment. And so for investors, this new era, in the absence of ever lower interest rates and in the presence of more dispersion, it really just underscores the importance of staying selective and active bond selection when it comes to markets like investment-grade credit or high-yield credit.
All right, Gurpreet Gill of Goldman Sachs Asset Management, thank you so much for your time and insight this morning. We really appreciate it. Now let's also keep you up to date with other news from around the world with the first word. Turkey has begun to deploy thousands of soldiers to areas struck by 2 massive earthquakes. They'll help in rescue and recovery operations. The death toll in Turkey and Syria has now gone over 8,000. Searchers are still pulling survivors out of the rubble. In China, President Xi Jinping is rejecting any need to westernize. He told top officials that the country's successful development shows there is another way to modernize. Xi reemphasized his goals of increased self-reliance and improved social justice. Ukraine's President Volodymyr Zelensky will be in London today to meet with Prime Minister Rishi Sunak. They'll discuss British support for Ukraine's military, including sending equipment to help counter an expected Russian offensive. Sunak will also offer to expand training to include Ukrainian fighter pilots. And the service that became ubiquitous during the pandemic is now adapting to slower growth. Zoom is eliminating 15% of its workers, about 1,300 jobs. The CEO, Eric Yuan, says that the company's headcount tripled in 2 years. He is reducing his salary and will give up his bonus. So, Anna, this is just yet another example of a company that expanded so rapidly over the last several years when it was boom times during the pandemic and now has to adjust to an environment that looks very different. We have seen that all across the tech sector.
Yeah, absolutely. The tech sector certainly comes to mind when we think about that. But also other sectors as well, Kaylee. I was talking to the Maersk CEO a little bit earlier on today, the big shipping giants, and of course we saw those freight rates really reflecting supply chain issues during the pandemic. They've come back down to earth, and we're living in a much more normal world. That was the way that the CEO described the operating environment for a business like Maersk right now. Now, coming up, we'll talk about European banking. We've seen plans to return cash to shareholders, a big focus on balance sheet strength as some of those balance sheets have been tested by credit risks in recent years. We will get to our conversation with the ECB Supervisory Board Chair, Andrea Enria.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. President Biden baits Republicans and taunts China's Xi Jinping. We'll look at the president's State of the Union address. A warning from Fed Chair Jerome Powell. He says interest rates need to keep rising if the central bank is going to quash inflation. And Bloomberg's learned that Credit Suisse will pay bonuses in installments to some of its junior and mid-level bankers. The Swiss lender is overhauling operations after a series of scandals and deep losses. I'm Anna Edwards in London with Kaylee Lyons in New York. Matt Miller is off today. And Kaylee, European stocks then responding to the macro trends on Wall Street yesterday, but also to the robustness of some of the earnings stories here.
Yeah, and I will say, Anna, what happened on Wall Street yesterday doesn't seem like it is getting fresh life this morning because we did snap a two-day losing streak on U.S. stocks. We ended the day higher, but this morning in the future session, we are just rolling over. We're right around session lows, actually, when it comes to futures, even though the market seemed yesterday, at least, to take Chairman Powell's messages pretty much the same as it was before the jobs report when he spoke after the Fed decision last Wednesday. Again, though, that sentiment not lasting this morning with S&P E-minis down by about 0.3%. Not too much movement in the Treasury market. We're down less than 2 basis points on the 10-year Treasury yield to 3.65. So still, we remain about 26 or so basis points higher than we were the day after the Fed decision, so we have to keep that in mind. And also very much higher over the last several days is oil. After a more than 4% gain yesterday on better demand coming out of China, we are seeing that extending today, up another 1.3% on WTI to $78.11 a barrel. Bitcoin essentially flat on the day, but we remain north of $23,000. It feels like this maybe is the new range for the cryptocurrency. As for some individual movers in pre-market trading to keep an eye on, a lot of them are in the solar space after we got better than expected revenue guidance from Enphase, which is a solar equipment manufacturer. It's up about 11%, and taking some other solar stocks along with it in sympathy. Solar Edge is up about 6%, Sunrun higher by nearly 3%. And then, Anna, I know people on your side of the Atlantic will be watching this story very closely as well. Manchester United up about 13% after the Daily Mail reported a group of Qatari investors are looking to make an offer for the football club in the coming days.
Yeah, and that is a sizable move because we already saw the share price respond to the earlier reports that the club was up for sale. So that is certainly one that we will be continuing to watch then, Kaylee, through the day. This is the European equity market space right now. Stocks in Europe up by 0.8%, as I say, playing catch up with Wall Street, but also factoring in some better earnings news. Some mixed earnings news coming through from AP Møller-Mærsk, the giant of the seas, the big logistics shipping business. This stock was down in early hours because the company's guidance looked to be much weaker than the market had anticipated. And if you're looking for macro clues, that might be where you focus. But a lot of this has to do with inventory buildup. And so after the market got some time to digest the buyback that the company is announcing, the stock actually managed to gain and is now up by 0.3%. Akzo Nobel, a Dutch paint and coatings business, up by 4.7%. This is the year of margin expansion. Those were the words of the CEO as he put it to us a little bit earlier on in trade. Costs coming down is essentially one of the reasons why that business looks to be doing better. And Adyen, this is another Dutch business in the payment side of things, down by 13.6%. And the focus, Kaylee, of course, for the tech sector has all been about retrenchment, about cutting jobs, about pulling back on investment. Well, that's not the message that we got from Adyen. Certainly on the recruitment side, they're pushing ahead with those recruitment plans, and as a result, the stock is a little bit weaker. Now, let's step to the financial services sector more broadly. European banks have been reporting this week, many profiting from the rapid increase in interest rates we've seen from the ECB. The central bank has hiked by 300 basis points since last July. How will banks fare then in 2023? We're joined by Andrea Enria, chairman of the ECB Supervisory Board. Andrea, very nice to have you with us. Various questions and themes around regulation that we want to get to you. I just want to get your sense, though, of the banking sector in 2023, given that rates have been rising, banks have been benefiting, rates continue, at least in the short term, to be expected to go higher. How do you think that banks are going to perform then in this year ahead?
Good morning. And well, in 2022, European banks had a very good year, honestly, in terms of profitability. As you say, the interest rates increase have been playing very well in their P&L. So it has been very, very positive. We didn't have any materialization of credit risk as we expected from the Russian war of invasion in Ukraine. So all in all, it has been good so far. And the baseline projection for next year is that if we have, a slowdown or even a shallow recession, banks should still see positive impact on their earnings. Of course, there are risks to these baseline projections. There is the possibility that, interest rates go higher and faster than expected, or that there is a recession which is sharper than expected. And that's why we as supervisors, of course, we are asking banks to be prudent at this juncture.
Well, on the subject of prudence, Andrea, we have seen several well-capitalized banks like UniCredit announcing large dividend payouts and share buybacks in recent days. What is your view on that, and do you expect that will meet with ECB approval?
We have, our supervisors have vetted the distribution plans of the European banks, looking at the capital trajectories. That's our point of attention. So we check that in a baseline scenario, but also in a sufficiently conservative adverse scenario, banks would remain above the regulatory yardsticks. And we found that for the largest majority of banks, this was indeed the case. So the banks' distribution plans are sustainable, and then is where we will not raise any objections. We also saw that some banks that were planning very sizable distributions have wisely chosen to spread their buybacks into different tranches, also to look at the possible turns in the macroeconomic environment, which we think has been prudent. But all in all, the distribution plans are sustainable from our perspective.
Okay, and let's talk about capital add-ons as well, because the ECB hit banks like Deutsche Bank, BNP Paribas with add-ons late last year because of concern around leverage loan risk and taking too much of it. How have those banks responded? Have they dialed back? Will you remove those capital add-ons in the coming months?
Yeah, our capital add-ons are targeted. Banks know very well what are the issues that we have identified, the weaknesses in their risk appetite frameworks, excessive generation of highly leveraged loans. So they know what they need to do to remedy the issues that we have identified. And as soon as these issues are remedied, the capital add-ons will be removed.
Can I ask you about the possibility of using other additional capital add-ons, Andrea? And I'm thinking here about, in particular, counterparty credit risk. I know that you said just this morning that capital add-ons are possible for this type of risk if banks fail to comply. This perhaps comes back to Archegos and the things we've learned there. Where are you seeing resistance from banks to comply with what you're asking?
To be honest, let's say we issued our recommendations on counterparty credit risk pretty recently. We completed our review in the last part of 2022. So we need to give now some time to the banks to actually follow up to our recommendations and comply with them. And I expect that they will comply. I mean, that's our central expectation. So we expect that there will be no need to apply capital add-on. Of course, if banks, as it has happened in the case of leverage finance, we see for a long period of time that they do not react, and they actually move in the opposite direction. So continue originating high risk exposures and with poor, let's say, risk controls. Well, then that's the moment in which we will need to ask ourselves which type of remediation tools we have in our toolbox.
From a regulatory perspective, Andrea, are you confident that another Archegos could not wreak havoc on the European banking sector once again, or could it still happen?
To be honest with you, I've been surprised that there have not been other cases. We've seen quite a lot of financing moving from the banking sector, from the regulated banking sector to the non-bank financial sector. This was also something to some extent driven by the post-crisis regulatory reforms. And we know that there have been segments of this market in which there has been significant increase in leverage and concentration of exposures. So I would have expected this to happen more. By the way, our recommendation to banks is to keep the guard high, to maintain very strong, risk management frameworks to deal with these type of exposures. And we hope that these recommendations that we have done following our review of this specific line of business will help at least sheltering banks from these events if they happen.
Andrea, thank you very much for your time. ECB Supervisory Board Chair Andrea Enria joining us there from Frankfurt. Coming up on the program, we'll get back to the politics, to President Biden's State of the Union address. We'll be hearing from Greg Valliere, Chief U.S. Policy Strategist at AGF Investments. What stood out to him from the president? This is Bloomberg.
are so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We've already created, through help, 800,000 good-paying manufacturing jobs, the fastest growth in 40 years. And where is it written? Where is it written that America can lead the world in manufacturing? And I don't know where that's written. For too many decades, we imported projects and exported jobs. Now, thanks to what you've all done, we're exporting American products and creating American jobs.
That was President Biden touting his economic successes in his State of the Union address last night. In the speech, Biden focused heavily on economic themes, calling for higher taxes on billionaires and tax buybacks, as well as new consumer protections and antitrust efforts. Joining us now to unpack Biden's comments and look ahead is Greg Valliere, AGF Investments Chief U.S. Policy Strategist. So, Greg, good to see you. The president tried very hard to convince the American people that he has done a lot in his 2 years in office. How much is he realistically going to be doing in the next 2 years, considering the Congress he was addressing is divided?
Not a lot, Kaylee. I think that he's got most of what he wanted already. I think the next 2 years are going to be dominated by two factors. Number one, all the investigations against him and Hunter and on and on and on. And number two, geopolitics, whether it's Ukraine or China or Iran. I think those two issues will dominate, even though Biden does have a valid case that the economy is in pretty good shape.
Well, and if we are viewing this as a quasi-campaign speech, if indeed he does run in 2024, which we don't know for sure, but we all think, or at least the consensus seems to be that that is going to be his plan, is it so much about casting himself as the right choice or the better alternative, considering we once again last night saw him sparring with the other side of the aisle, Marjorie Taylor Greene standing up and calling him a liar? How much is it going to be about framing him as the alternative as we go forward?
Yeah, he's going to have to hit back hard, in part because he's 80. I mean, he can't do anything about that. But I think his age is a factor. I think people feel that his energy has diminished over the last few years. So he's got to show a lot of activity there. The other thing is to really go after the Republicans and cast them as the villains on a possible debt default. He may have some luck on that.
Yeah, what did we learn yesterday, given the mood in the room and the way that certain messages went down, Greg? How does that inform our thinking about the debt debates that are going to happen between now and the fall?
It's not a really optimistic sign. It's a foreboding sign for the debt battle. You've got Republicans divided. We had the spectacle of Kevin McCarthy trying to shush Marjorie Taylor Greene and other Republicans who were booing and heckling the president, and McCarthy was not real successful at doing that. So in addition to divided Republicans, I think you're going to see the Democrats also not in great shape. Their margins in both houses are minimal.
From a business perspective, there was talk of higher taxes, there was talk of buybacks being in the frame when it comes to the president. But does that tell us anything about where policy goes on those fronts, Greg? Is this what we heard from the president on that front? Is it in any way likely to be delivered?
Well, there's going to be a lot of rhetoric, and Joe Biden can read the polls, and the polls show the public hates the oil companies, big business. The public wants to tax the very wealthy. So Biden knows this, and he's going to go after these issues and go after things like big oil. The problem is he doesn't have the votes, and I think there's a headline risk for big oil and big companies, but there's no legislative risk. The votes aren't there.
And that's all kind of on the domestic side. Greg, did we learn anything significant about the stance he is taking in foreign policy with his rhetoric around China in particular post-balloon incident?
Well, everybody in this town, in both parties, has great antipathy toward the Chinese. The way they've handled COVID, the way they treat their dissidents, the way they spy on everybody, their threats to Taiwan. So you're going to have almost a unanimity in Washington against China. The other story that did not get much clarity, to my disappointment, was Ukraine. Is this Congress willing to continue offering aid? The jury's still out on that one.
What do you think about that, though, Greg? Because that is a conversation we were having around the midterms, especially the idea that if Republicans had greater control, it may be more difficult to get aid to Ukraine through. Have you been able to formulate further your thinking around that a month into this new Congress?
I think NATO still is remarkably unified, and there will be tanks from Germany and the U.S. They're not coming right away. They're probably a few months away. So I think there's still a decent amount of aid. However, the House conservatives, this very radical group, does not want to spend a lot more money on Ukraine or actually a lot more money on defense. That's going to be one of Kevin McCarthy's greatest challenges to bring them into the fold.
And finally, on the subject of some of those conservatives or the far right ring of the Republican Party, they also have clung to certain ideas around the Biden family, Hunter Biden's laptop, for example, and launching today, as you alluded to earlier, is that congressional investigation. The Oversight and Accountability Committee is going to be looking into those financial dealings. Is that something that helps or hurts the president or the Republicans to a greater extent, Greg?
It's a really good question. I think it could backfire if the Republicans are viewed as too aggressive. But at the same time, there's going to be a lot there. And virtually every week for the rest of this year, there'll be some blockbuster hearing that's going to go after Joe Biden.
All right, Greg, we have to leave it there. But thank you so much for waking up early for us post State of the Union to give us your thoughts and look forward. Greg Valliere of AGF Investments. Now, coming up, we're going to talk about a different kind of leader, one in the sports world. LeBron James breaks the all-time NBA scoring record. We'll have more of the basketball player's career highlights next. This is Bloomberg.
Very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them, and so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value, and the kind of transparency that they want.
Are you seeing a labor shortage right now, and what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards in London. Matt Miller is off today. And Anna, we have to talk about the king. In the NBA, Los Angeles Lakers star LeBron James has broken the league's career scoring record. His jump shot against the Oklahoma City Thunder eclipsed the mark of 38,387 points set previously by Kareem Abdul-Jabbar. Joining us now is Bloomberg's Greg Tanner. Before joining Bloomberg, he covered basketball and has interviewed LeBron himself on several occasions. So, Greg, obviously a big deal. Just how big a deal is this?
It's hard to overstate it, honestly. I mean, we've seen in recent months 40-year inflation readings get broken. Now we've seen a near 40-year NBA record get broken. I think a lot of basketball watchers, myself included, if you'd asked me 8 to 10 years ago, will Kareem's record ever be broken? I honestly probably would have told you no. There's a reason that it stood for nearly 40 years. But the fact that LeBron has done it in his 20th year speaks to his longevity and actually speaks to the fact he is a scorer. It's almost ironic. He's been known throughout his career as being more of a facilitator, more of an all-round player, less so of a scorer than a Kobe Bryant or a Michael Jordan. And now he's done it. And, you know, a record that's 8 months older than himself has finally been surpassed.
Yeah, quite incredible. Greg, only you could tie this back to financial markets, for which we appreciate your contribution. But let's stick with the game for a moment. A bright spot for LeBron then, but this comes, I understand, at a rough time for him and the Lakers. Tell us more.
It does. It's almost like the game last night was a microcosm of the season. Great moment for LeBron, but they lost to Oklahoma. And it's been a losing season for the Lakers overall. They have a 25-30 record, which puts them at 13th in the Western Conference, out of playoff contention, out of even making the play-in tournament. And with LeBron being 38 years old, his window is only going to last so long for how much greatness he has left. The clock is ticking. Father Time is undefeated against everyone. And the Lakers, need to buck up. They had been hoping to get Kyrie Irving, who last week requested a trade out of the Brooklyn Nets, but he was snapped up the other day by the Dallas Mavericks. So that sort of hope for improving the roster has gone away. And actually, the last thing LeBron tweeted was, maybe it's me. He hasn't even tweeted about setting a record overnight. His last thing was a regret about not getting Kyrie Irving. So yeah, this is a bright spot, very much in a down season for LeBron and the Lakers at the moment.
Greg, finally, I do want to bring it back to the money because this is Bloomberg after all, and some of these stats are astounding. LeBron James has been paid nearly $11,000 for every point he has scored, if you break it down. He's made something like $420 million over this 20-year career. How does the money in basketball stack up against other sports? Because $420 million is nothing to sneeze at, but when you look at the contracts some of these guys are getting now for a shorter duration, I don't know.
Exactly. Every year, the TV money seems to go up and up and up. Every time they re-up on the deal, and then the following year, the players re-sign their contracts. It's insane. And that $450 million as well, you know, when you're doing the maths and it's $11,000 per minute, that's just his NBA salary as well. You've then got to factor in all his endorsements. I think he signed a $70 million deal or $90 million deal with Nike before he'd even stepped foot on an NBA court at the age of 18. So the money is bonkers. But as you say, Kaylee, it keeps going up every year. All the time, primarily the television revenue keeps increasing.
Greg, thank you very much. Bloomberg's Greg Tanner with the latest on that story. And Kaylee, you mentioned the earnings, and another financials element to this story, I suppose, is that tickets for this game were on sale for about $80,000 on sites such as StubHub. I mean, we talk about inflation. That has to be some serious inflation.
Yeah, and we've seen this evidenced well beyond sports with Taylor Swift, for example, and we'll see if the same thing happens with Beyonce, Anna. But on the subject of tickets, I just did a quick Google for the Super Bowl this coming weekend. Price range between $4,000 to start up to $400,000 for a suite at the match between the Philadelphia Eagles and the Kansas City Chiefs. I would love to go to a Super Bowl, but I think that's a little bit out of my range.
Yeah, I mean, you could buy a house for that. Yeah, absolutely. Right, let's leave that story there. That is it for Early Edition. Surveillance is ahead. Tom, John, and Lisa, they'll be hearing from New York Fed President Bill Dudley. What did he make of what Powell had to say, the way the markets responded to what Powell had to say yesterday as he was in conversation with David Rubenstein. Lots more still to come then on these markets. This is Bloomberg.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and their work. I know I deal with that all the time. This is really a people-first company. And even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Rates are going up now, not because of central bank speak. They're going up because growth is proving to be stronger than expected.
The strong labor market and inflation that does remain persistently high really doesn't support any kind of pivot by the Fed.
The reality is the equity markets and the bond market have not believed the Fed up to this point. They just don't believe it.
If you look at the statements alone from all of these central banks, they lean hawkish.
Right now, this labor market just continues to be a stubborn kind of nuisance here for the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
You're a liar. Congress was like Parliament last night, wasn't it?
You know, had like a Parliament feel.
Yeah,
Did he like that?
I thought of that actually. Did you feel that?
He likes it. I mean, I don't know. It's just circus. That's what it felt like to me.
Felt like a circus.
Yeah, is that
Lovely.
what it feels like in Parliament?
Good morning to you. It is a circus over in Parliament, bit of theatre for you. We'll get to that a little bit later. From New York City, this is Bloomberg Savannahs with Tom Keane and Lisa Bramwitz. I'm Jonathan Ferro. Futures down 0.25% on the S&P. I know what you're laughing at. We're not going to talk about that right now, okay?
John, you've never kissed me like that.
Just, let's wait for Anne-Marie and see what she's got to say about this in about 10 minutes. We need to talk about Chairman Powell as well. I'm going to say this. At least I'm going to try. Quote of the last 24 hours came from Mike Gapen of Bank of America Stop. This is what he said. Volcker has left the building. The Fed is embracing painless disinflation and hopes it continues. We're not in Wyoming anymore. Back to Wyoming, Jackson Hole, the end of August. That Fed chair, Tom, is not the Fed chair that sits in front of us now.
It's really true, and I thought the one with the best perspective on this yesterday was Michael Darda. We're talking about inflation as the third rail, and the idea here is the worry, is it a 70s inflation? Is it a Korean War inflation? And Michael Darda of Roth MKM, I thought, was brilliant yesterday, going back to Friedman and saying it's neither. It's an inflation having to do with the Biden stimulus, the back end of the pandemic stimulus, and we're weaning our way off it. And that's where the debate begins. It's not Volcker.
I'd say there's a bit of good news now, though. The gap between the Fed and this market isn't actually that big anymore. So that's the good news. I guess maybe we don't have to listen to Chairman Powell in quite the same way as we did before, and we can just focus on the incoming information, Lisa.
When you say we, is it the bond market or the stock market? And this, I think, is really the interesting divide that's emerging in markets. Bond markets are hearing what Jay Powell is saying, not the fact that he isn't pushing back or that he doesn't sound like, an 8-minute, very direct, we're not going to blink. And he's being more nuanced about it. The bond market still hears 5.1% terminal rate for longer. Does the stock market?
Well, right now, given the rally we've seen so far this year, perhaps not.
Well, but this to me is the most interesting divide. At what point do we close that gap, and what has to happen in order for this melt-up feel to really get dissipated?
We've got to see some stronger data potentially, Tom, on the labour market side. I think we've got to see some hotter inflation reports as well. You've talked up February 14th.
I have.
Next week.
Others have as well.
CPI. You want to talk about last night? You're desperate to do this, don't you?
No, I mentioned 3 times. I don't want to talk about it.
You've referenced it 5 different times now.
I want to talk about Abramowitz. When I did my cameo yesterday, thank you, Kriti Gupta, Vonnie Quinn, and all for letting me speak with Mr. Rubenstein and others after the soiree yesterday. And I mentioned Abramowitz 3 times, John, because the insight yesterday was a 4.x% one-year Treasury bill. And that's what we're really talking about here, is with a vengeance, John, things cost money now. That's what we're seeing.
So the additional thing you've got to think about, and I know it makes sense, let's buy the front end, let's take 450 and run away for the hills. What we heard yesterday from several guests, and I think this is an important point, the reinvestment risk 1 year, 2 years down the line. Can you pick up 450 in a year, 2 years, in the way you can now with the same ease? Or do you have to take the additional risk and maybe much more risk because the interest rate backdrop changes? Now, that's the kind of decision, Lisa, you've got to make looking at fixed income at the moment.
Especially if you do buy into this rapid disinflation, even if it stops at 3%, then the 10-year Treasury seems to hold some value. What I thought was interesting yesterday was a lot of our guests seemed to think that duration kind of had been overplayed. The trade was already up, and they were kind of a little less confident in going into 10-year Treasuries at 3.5% than they were, say, a couple months ago. So to your point, maybe the reinvestment risk of not being in that longer duration instrument isn't as great as it was a couple months ago.
Let's get to the equity market and the price action before Tom brings up that kiss again. Equity futures down about 0.25% on the S&P. Imagine for the people just tuning in that still don't know what you're talking about, TK.
I didn't know what I was talking about.
You're responsible to explain to them what you are talking about in just a moment. In the bond market, yields are in a couple of basis points. Your 10-year 364.90 and euro dollar, we've seen 110. 106, all in the last week on euro dollar, Lisa, 107.45 right now.
So hard to parse out what to pay most attention to, especially as you have a host of speakers from the Federal Reserve coming out perhaps to do some damage control after yesterday's confusing response, at least in markets, to Fed Chair Jay Powell's message. I mean, really, this is the Fed parade. New York Fed President John Williams, Lisa Cook, Fed Governor, Michael Barr, Fed Vice Chair for Supervision. We've got Raphael Bostic of the Atlanta Fed, Neil Kashkari of Minneapolis, and Chris Waller of the Fed. All lined up today.
They're all on the same page.
Yeah, well, are they? And this is really going to be the question. Is there nuance that they really highlight that people read into what Fed Chair Jay Powell said yesterday, simply because he did not come out and say, I don't like that the market rallies when I talk. I mean, really, that seems to be what the market was looking for. Today, we also get a post-State of the Union election tour, maybe. Biden and his cabinet are going around the country and discussing all of their plans. President Biden is going to be in Wisconsin. Janet Yellen, Treasury Secretary, is going to be visiting a battery factory in Tennessee. And Commerce Secretary Raimondo is heading to New York. She's going to be talking about the semiconductor manufacturing incentives and how to really grow some domestic production. That really is gaining some interest in markets and also from a policy perspective. And today, the earnings parade does continue. The focus really is on the consumer. Uber before market, Disney, Mattel, and MGM, among others, after the market. How much do people keep spending, John? And that really could potentially give a sense of how long we could see the disinflation on the goods side and the lack thereof on the services side.
Hey, Lisa, thank you. Thank you very much. We've got such a fantastic audience. This comment came in, Tom, almost immediately. Point of order on the comparison between Congress and Parliament. If you call someone a liar in the Commons, you'll be asked to leave the House for using unparliamentary language. You'll be asked to leave.
My first visit years ago with Bloomberg to Parliament, which was a great honor, I was thunderstruck within the violence of the debate how cordial everyone was.
They're still polite.
Yeah. Gordon Brown was like this with whoever.
Violent but polite.
And with David Cameron, I'm going to guess. But whatever the debate was at the time, there was still a politeness like you every day.
Oh, so polite.
Like,
and thanks for that, Tom. I appreciate that. Very diplomatic. And thank you to Trading Floor Audio for sending that across. Thank you very much. Joining us now is Jonathan Stubbs, the equity strategist at Berenberg. Jonathan, great to catch up with you, sir. Has Chairman Powell given us a green light to buy risk?
I don't think so, because to buy risk at this point, you need to get comfort with macro and fundamentals. Technicals need to be on side. If we are sort of religious about the yield curve, when the yield curve's inverted as it is, it has not been a great time to be taking on risk blindly over the last 20, 30, 40, 50, 60, 70 years. So there's no strong signal there. Fundamentals, you have to believe that a US nominal growth number, which is going to be heading around 4% in the recovery year next year, real plus inflation, is enough to juice earnings. Again, that's tough. And on the technical side, the support from price momentum, such as golden crosses, but most technical indicators that we look at, RSIs, breadth, sentiment, are not giving the same green lights they were in October. So I think it's very tough to take what Powell said and to say risk on.
Jonathan Stubbs, Jonathan Farrow lectured me yesterday on the strength of the FTSE and something of a new high in the FTSE, a resurging equity market within your United Kingdom. Is the FTSE for real, and is there going to be some form of new generation of it post-Brexit, post-pandemic?
No, interestingly, the UK was probably the strongest developed equity market last year because it had the best sort of natural stagflation hedge within the index. It's very long, as you know, commodities, defensive growth, and financials are well set. So what it has to do, if it wants to retain a sort of a leadership or outperform role in global equities, which we think it can, it has to pivot to the rest of the market also catching up with that sort of natural stagflation hedge. And that needs the UK economy to improve into the second half of this year. It needs the dollar to be softer, which is a key call for us and has been for the last few months. We think the dollar will remain soft. And if you get a softer dollar, stronger sterling, if you can get the mid-cap stocks performing well into a recovery second half of this year, then the UK can continue to perform and be one of the lead parts of global equity markets. But to us, it all points actually to the US no longer being the sole driver of the global equity block, which it has been for so many years, of course.
How much of that argument, Jonathan, really is hinged on the tech dominance in U.S. indexes and the lack thereof in some of the European benchmarks?
Yeah, it's a big part of it. I mean, what's interesting is just hearing your conversation before I jumped on. If you take the NASDAQ 100, and you look at the free cash flow yield gap between the NASDAQ and US 2-year risk-free over the last 10, 12 years, that's averaged 400 basis points. So any investor could have bought US tech, the lead engine of the post-financial crisis bull market, and taken this 400 basis point yield pickup. Today, that yield pickup is zero. And clearly that's a function of how steeply the short end has moved up, but it also shows in relative terms how that yield pickup advantage over risk-free that technology had as a sector is no longer there. And then secondly, very briefly, the surplus free cash flow yield which US tech provided relative to the broader US market, say the S&P or another sort of broad index over the last of 10, 15 years, disappeared around 18 months ago. So you used to be able to buy US technology relative to US equities and harvest this surplus free cash flow premium. And therefore, tech was a cheap sector on a free cash flow basis. It no longer is. So to get the same tech leadership going forward, we need to go back to the free money period. That's not happening anytime soon.
Jonathan, just 30 seconds here. Why do you think the market keeps rallying? Why do you think tech names keep rallying, considering that almost every investor who's come on this show says the same thing you do?
Yeah, I think if I look at our toolkit and keep discipline to that, it's very hard to get really positive risk in terms of equity from a macro perspective. It's really hard on a fundamental perspective. US equities is trading 18.5 times 12-month forward earnings. The only time the US has traded more expensive than this in the last 50 years is when we've had liquidity bubbles, TMT, and post-COVID. So the US looks really, really rich. What's happened is we've had extreme positioning back in October, technicals, very supportive of risk on, and that's been playing out, and we have capital chasing that. So the only signals today which tell you to go out and take on more risk in the market and chase the market are actually price signals themselves. So I mean that can keep rolling for a while, but ultimately it needs the fundamentals and macro to support that, and that's where the challenge I think is for most buy-side, sell-siders who look at fundamentals and look at macro pathway.
Hey, Jonathan, this was great. It's been too long, mate. Let's catch up soon. Jonathan Stubbs there of Berenberg, looking for that fundamental validation of the next leg higher. JP Morgan, they don't think it's coming. You heard from Mr. Stubbs there that he doesn't think it's coming either, Tom.
I think I'm waiting for the bears to readjust here. When do they not capitulate? That's too much drama, but how do they readapt and readjust to the resiliency?
Will they find the courage to be bearish? I think that's like the question, isn't it, Bramo? the courage to be bearish.
Yeah, that's what we're doing here.
Sarah Hunt joining us in the next hour from iPound Saxon Woods. We're going to catch up with Anne-Marie Jourdain down in DC on a chaotic State of the Union address. Up next.
Definitely a word for it.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden's State of the Union address foreshadowed what could be his re-election stump speech. The president highlighted accomplishments on infrastructure, climate, and consumer protections in his first 2 years in the White House. But there was heckling from Republicans on Social Security and Medicare, the border, and other issues. Turkey has begun to deploy thousands of soldiers to areas struck by 2 massive earthquakes. They'll help in rescue and recovery operations. The death toll in Turkey and Syria has now gone over 8,000. Searchers are still pulling survivors out of the rubble. Federal Reserve Chair Jerome Powell is sticking to his message that interest rates need to keep rising to put down inflation. At an event in Washington, Powell floated the idea that rates may reach a higher peak than traders and policymakers anticipate. He said that if the job market remains hot, the Fed may have to do more. Ukraine's President Volodymyr Zelensky will be in London today to meet with Prime Minister Rishi Sunak. They'll discuss British support for Ukraine's military, including sending equipment to help counter an expected Russian offensive. Sunak will also offer to expand training to include Ukrainian fighter pilots. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
politics. No one covers the world like Bloomberg.
Return to pragmatism is really that everybody's in line. The government, the enterprises, the people, in pushing this economy. It's like a cycle of renewal.
Big tech layoffs rolling in. Spotify, the latest to tighten its belt, with plans to cut 6% of its employees.
Is the economy unfolding as you thought it would?
I think the economy is responding to work that the Federal Reserve is doing.
Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number. Blowing through estimates.
These guys are minting money.
With exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
Does this quickly become just a really crappy business model?
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
The story of America is a story of progress and resilience. 2 years ago, COVID had shut down, our businesses were closed, our schools were robbed of so much, and today, COVID no longer controls our lives. We've already created, through help, 800,000 good-paying manufacturing jobs, the fastest growth in 40 years. We're better positioned than any country on earth right now. But we have more to do. Food inflation is coming down, not fast enough, but coming down. Inflation has fallen every month for the last 6 months.
The President of the United States on the State of the Union, live from New York City this morning. Good morning. Off the back of that address and off the back of Chairman Powell's interview down in Washington, equities look like this. We are down after a bounce yesterday. We're negative by about 1/3 of 1%. We are lower on a 10-year yield by a couple of basis points at 364.72. And to Lisa's point, there is a ton of Fed speak today, Tom. A ton.
Yeah,
you get
who
New
do you
York's
listen to?
John Williams. I think you listen to Williams front and center. And he's going to kick it off at what time? 9:15?
9:15, yeah.
Looking forward to that later.
I agree that Mr. Williams of San Francisco, now New York, serious academic chops, and of course he's got huge research on the real rate and the dynamics of this so-called R-star, which I've never really.
Big conversation whether neutral actually needs to come up.
Yeah.
Where have they got that at the moment? 2.5, something like that?
Something
in
like
the dot
that.
plot?
And a lot of people think it's got to go a little higher.
Got to be pushed
It's
up.
a raging debate. Adam Posen's been leading it. We thank him for his attendance as well. Let's get to the State of the Union here. Anne-Marie Horton picks up the pieces. She's our Bloomberg Washington correspondent. I love, Anne-Marie, what the Washington Post did where they had the themes of the speech. And it's real simple. It was the state of the economy. Let's start with basics here of civics. Why did the president focus on the economy?
Well, I mean, you can go back to Carville, who always says it's the economy, stupid, when you're running for president, which is wanted former President Bill Clinton to focus on. But the president was given a gift on Friday of this very low unemployment number, and he wanted to lean into all the economic work his team was doing. Remember when he took over the presidency and his administration, they were dealing with a high unemployment rate. They were still dealing with COVID. And then, of course, they were dealing with high inflation. He feels that he was able to tame all of these things and at the same time keep a robust labor market. His issue, which we talked about yesterday, is this is not resonating with the public. So he talked about some of that economic anxiety and how he still sees more work to be done. But at the end of the day, he's very optimistic. And he thinks this is an agenda that Democrats could run on, because obviously this is somewhat of a soft launch for a 2024 bid for the president. And then the biggest issue that this Congress is facing at the moment is obviously the debt ceiling, and he wanted to make sure he focused on that and also paint a different picture from what some Republicans want to do and what the Democrats want to do.
Mace, to your point, it's not resonating with the public in the way that maybe this White House would like. Reed Pickett has put out the story this morning off the back of a Gallup poll. Half of Americans say they're financially worse off now than they were a year ago. That's the highest share since 2009. What can they do about that?
It's very difficult because many Americans, maybe they kept their jobs, right? We do see a very low unemployment rate, but they are not feeling it in their wages because of such high inflation. So I think as more inflation comes down, potentially that is something that can ease concerns for American and potentially help this administration. But that's where really the root of the cause is. And they spoke about that in background calls and some on-the-record calls ahead of the State of the Union. The president wants to make sure he addresses this economic anxiety, and he comes at it from a place, a human place, a place where he says he knows what it's like to grow up living from paycheck to paycheck. But at the moment, it is not resonating.
We know that how to address these issues brings up division in Congress. That's not a surprise to anyone. Where you can unite Congress is on the Chinese Communist Party. There was a fascinating line in this address from the president when he said, "Name me a world leader who changed places with Xi Jinping." AMH, when you heard that, what did you think?
And then he said, name me one, name me one. This was an interesting comment because this was off script. This was not in Biden's pre-prepared remarks, if you're following along as he's speaking. So he directly named Xi Jinping, which was not planned in the same way. So this was a bit of a moment for him to really take a hit at Beijing and Xi Jinping in particular. At the same time, these comments were also slightly muted in the sense that the president didn't directly drop the incident with the Chinese surveillance balloon. He gave it a veiled reference saying, as we did last week, we will of course defend our sovereignty, but he didn't discuss the balloon head on. And he was receiving a lot of pushback going into this speech about why they didn't shoot down the balloon earlier. But make no mistake, the president gave similar remarks as he has been about China. He wants to deal with China on issues like climate change that help American interest, in his words, but at the same time wants to make sure that they are combating China, especially in the economic sphere.
It was interesting where he went off script just a bit. And the energy space, he also seemed to go off script just a bit, talking about the next decade that we need to rely on fossil fuel companies. Yes, they need to pare back some of their production or our reliance on fossil fuels. This really kind of went against some of the base. What was the reaction like that?
So when he said we're going to need oil and gas for another decade, the Republicans in the chamber laughed. They were laughing at the president in this off-script moment. And this line is likely going to come back and haunt the president if he decides to run and makes his announcement for 2024, because this is something that the progressive wing of his party does not want to hear. And this is also something that the president campaigned on. He was a climate candidate. He made climate change a key part of his candidacy to become president. And the facts of the matter is, reality was different when the president took the White House and they dealt with sanctions against Russia and a huge energy crisis. And that meant $5 a gallon gasoline. And now he's talking about the fact that they need fossil fuels and they want these companies to actually drill more.
You know, I don't know about you, Anne-Marie, but there was one big thing missing in that address from the President of the United States yesterday. Where was the happy birthday for Anne-Marie Jourdain? What happened to that? Just a little subtle happy birthday AMH. Don't you think that would have helped?
No comment.
No comment?
No comment.
No comment?
She's completely drinking the Kool-Aid.
I'll tell you why we didn't do this yesterday. We didn't do this yesterday because AMH forgot my birthday in December. Came to me a day late on it.
I did not. That's not true. That's not true.
That is true.
I believe I also sent you ice cream for your birthday.
You might have done a day late too. Anne-Marie, thank you. Happy birthday.
Happy birthday.
AMH down in Washington. Happy birthday. Isn't that a beautiful thing?
It's very
happy
sensitive.
birthday. It's an incredibly sensitive time.
It's just
very emotional.
What are we talking about?
It's an emotional time.
Do you think?
Absolutely.
I'm so
Birthday's
glad,
an emotional time.
John, I'm so glad you brought up the Gallup poll. Half this nation feels left
Sure.
out. To me, the State of the Union, and frankly, what we do every day is a bunch of suits and fancy ties and dresses talking to elites. And there's a whole other world out there that this president's trying to address. And frankly, the Republicans have a huge vested interest in. Every survey I see says the Republicans have a rural conservative vote. And they're out there, and it gets lip service within the major media, including us.
One of the most noteworthy aspects of last night was Kevin McCarthy trying to wrangle the Republicans. Like, guys, come on, behave.
Be professional.
Be professional, right?
Sure.
And then being like, oh, guys, please stop, and sort of they raised this real question about the leadership, and where is the gravitational pull on both sides of the aisle right now?
The biggest division in Congress right now is within the two parties.
100%.
And not between the two parties. And that's the problem that both parties have got right now, Tom. That's going to be a problem for President Biden, and it's going to be a problem for any Republican who wants to try and unite this party in the primaries and take him on in 24.
Somebody yesterday in the Blur said this is so unusual, and I didn't take their head off, but I made it very clear, no.
That was me. You took
a reading of history this is normal that we see. And John, it's normal at this part of the cycle. It goes back to an exceptionally fractious Democratic Party experiment, really going back to the 19th century. 64 was an absolute Donnybrook for the Republicans. And I think it's a lot like what it is now.
The 60s.
The 60s.
A lot of references to the 60s.
AUH20.
You got a song to go with that then?
You know,
no, I don't have a song.
I had that in my head yesterday, and I blamed you.
What, the song?
The Age of Aquarius.
What, him singing or the actual song?
I'm not sure.
I think Barry Goldwater would have liked Flying Burrito Brothers, frankly.
That sounds great. Sing us out, TK. You've got this.
No one can claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
The top names in business are on Bloomberg.
I think the future of autonomy is real for civil. It's going to take time. Everyone's got to build confidence. We need a certification process that we all have faith and believe in. As you may know, we have an application on an all-electric autonomous airplane we refer to as WISC. There's so much to learn, so much to do, but it is being done.
Nobody covers business like Bloomberg, your global business authority.
equities down 1/3%, snapping a two-day losing streak on the S&P 500 in yesterday's session. Good morning to you. We look a little something like this on the S&P, down 1/3 on the Nasdaq, down 0.2. The scores year to date: the Nasdaq 100's up 16%, the S&P 500 is up 8%. The move we've seen in the bond market, we're higher by about 40 basis points or so, in and around that kind of level from the lows of Friday morning. 444.38 on a 2-year. We come in a couple of basis points from the close yesterday. On a 10-year, 364.90, down a couple of basis points there too. We all wanted to know one thing: had Chairman Powell changed his mind on anything after the payrolls report that he saw on Friday? Take a listen to what he had to say.
The labor market report for January, it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. If we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
What you got there was the two bookends of the whole news conference. At the front end of the news conference, he was talking about, yeah, just validates our current stance. Then at the very end of, not the news conference, the interview with David Rubenstein, you got, yeah, well, if it continues, we might have to go higher. But I think for a lot of people, no real change from Chairman Powell. Andrew Hollenhorst has this to say at Citi, reality check: the jobs report from Friday, quote, leaves us unconvinced that wage growth will continue to moderate meaningfully enough to return price inflation to 2%. Bramo, he's not alone.
A lot of people are saying the same thing and actually ratcheting up their expectations of what the Fed will have to do. What I thought was interesting is a number of Fed officials saying we couldn't believe that report. It didn't cohere with anything. It was almost like a skepticism about the data. I'm serious, because we heard this again and again. Even Jay Powell said none of us were expecting this.
I would be there, except what stunned me was the productivity report a few days ahead of it, where productivity was legitimate and unit labor costs were somewhat quiescent. If you hadn't had that occur, I'd totally agree with you.
Well, look at claims too, Tom.
Make of it.
Claims back down to like 180,000. Look at the ISM, non-manufacturing ISM, the services indicator, boom, higher jobs, to your point.
Yeah.
So a lot of things line up. Not to say that it should have been 500K, but a lot of things line up with a B. Our next guest, Tom, was looking for 300,000, and that was like the outlier on the street.
Yeah, he was like strange.
Sure. Yeah. And then we got 517.
That outlier is Andrew Hollenhorst. He is chief U.S. economist at Citigroup. He's really provided intellectual leadership over the last year. We had a wonderful conversation a number of weeks ago here on the terminal rate, on where this Fed will go. Andrew, John and Lisa want to dive into that, but what I'd like to talk to you about are the days at UCLA. You had the great joy of all the heritage at UCLA of Axel Leonovic, who's one of the bravest economists I've ever read. He was way out front in the 60s and 70s. Some people have said he was the Marine coming out of the trenches on inflation for Volcker. Axel Leonovic would look at the M2 right now, and he would just simply say, what do we have going on? What do we have with the money supply coming down? You were weaned on this at UCLA. Should we pay attention to Leonovic's M2?
Yeah, thanks very much, Tom. And you're right. I mean, UCLA was a great place to go to school. And I think the message was to always take the theory seriously, but then confront the theory with reality. And I think that's what Axel would ask us to do today. In terms of M2, you're right, it's coming down, but it's coming down after being up very substantially. And I think that's what is difficult in analyzing this economy, that we had such big movements during the pandemic period, big increases in savings built up. And we're trying to figure out now, as those things are moving in the opposite direction, savings, for instance, are of a tailwind than we might have thought.
What does your disinflation confidence look like? We've got this February 14th report. Do you have confidence to 5, to 4, to 3%? Or can you, as John mentioned in your note, get somewhere in the vicinity of Chairman Powell's 2%?
I think we're still a ways away from 2%. And we have some good news on inflation, which is that goods inflation has cooled. But that's really what we're seeing in these monthly inflation prints. And Chair Powell was trying to emphasize that. And let me just re-emphasize that a big part of what we've seen is used car prices that are coming down, goods inflation in general that has slowed. So that's good news on the inflation front. But if you look at those non-shelter services, you look at services away from housing, those are still inflating at a rate of about 4% annualized. So it does look like maybe some of the biggest most aggressive inflation on the good side has come off, but we still have this services inflation, and that's what's going to be sensitive to the labor market. That's what's going to be sensitive to a number like 500,000 plus jobs.
So then why, Andrew, do you think that Chair Powell isn't more aggressive, isn't taking the same kind of Wyoming tone with respect to his press conference on Wednesday, with respect to that interview yesterday?
I was a little bit surprised, to be honest. I think David Rubenstein kind of set him up to make some change, make some differences from what he said last week before the jobs number versus after the jobs number. I think you could tell from the body language and from reading between the lines a bit that there is a change probably. It's uncomfortable for a Fed official to make too much out of any one monthly number, but it's not just the one monthly number, Lisa. If you look at the pace of job growth prior to the January reading, we're running at something close to 300,000 jobs per month. So I don't think we're going to continue to print 500,000 jobs a month, but even 300,000 would be enough to keep that unemployment rate moving down. It's already at a 50-year low. I'll go back to those days at UCLA. If you do the basic macroeconomics, it's a very, very tight labor market. It's hard to think that that wouldn't create wage pressure.
But we are seeing wage pressure actually decline. So what do you make of that?
So that's been one of the most interesting things in the data, that we have this really tight labor market that's actually tightening further. And then you're right, across a range of measures, we saw some softening in wages. But remember, it kind of goes back to what we were talking about earlier. This is a softening from historically rapid wage increases. We were reopening the economy all at once. Every restaurant was trying to hire workers at the same time, bring these workers back into the labor force. That, of course, is going to create a surge of wage pressure. So maybe we've come off of that surge of wage pressure against a bit, and we've come down from, call it 5% wage inflation to 4% wage inflation. But with a really tight labor market, I wouldn't expect that to slow further. And if anything, the risk is that it accelerates.
Andrew, after the March meeting, May 3, June 14, July 26, the school starts again September 20. Which of those meetings is the real crucible for this Fed, where they've really got to decide if they're demand structured, Phillips curve driven or not?
So I think you have a few signposts along the way. The March meeting is going to be really important because that's where Chair Powell isn't going to be able to do what he did in the interview yesterday and kind of say, well, let's let the data take us where it does. The FOMC will have to come out, and Fed officials broadly will have to come out with their projections for the economy, inflation, and importantly, for that terminal policy rate. Right now, they have it 5 to 5.25. If you look at that jobs report, maybe if anything, it should be revised up. So we'll see where the core inflation data comes in. We think it'll be a little bit stronger. Where does that median dot go at the March meeting will be really important. It looks like a 25 basis point rate hike is quite likely in March. The question is going to become May and June. They've talked about ongoing rate hikes, probably another hike in May. We think they're going to be hiking again in June, but this is when it might get a little bit more difficult because they're going to have to actually navigate between a labor market that, if financial conditions tighten further, should be slowing, and inflation that is still too high. So how are they going to navigate that tension?